Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, November 3rd. Welcome to November. We got 2 months left of 2025. We are officially starting stock market trading for November. Thank you, everybody, for being here. I hope everyone had a good weekend. We got a lot to talk about, a lot to get into. Today is going to be a massive day. We've got Palantir after the bell. This is my 17th quarter covering the company publicly, so very excited for Palantir. I did a bit of a Palantir preview last night on the Future Show. We'll talk more about it today, but it's going to be a massive day for Palantir, so we are going to get into that. We got Grabby Grab at 7:30. That's a new stock that has entered the portfolio this year, so it's going to be a big day for Grab. And then you got AMD this week, Robinhood this week, SMCI, Airbnb, Uber, Shopify. I mean, you just have a ton of companies this week. Last week, we had the Fed cuts. It was very important. We had big tech earnings. It was very important. And then this week, we got a lot of other companies that are going to be pretty important to analyze as we get into the end of Q3 earnings season. Now, before we get into anything, because we got a lot to talk about and a lot to get into, we got to start off with the news of the day that I'm sure all of you are excited about for the Iren bulls. Today is your day. Today is your day. A couple weeks ago, it was AMD's day. A few months ago, it was Nebius's day. Last week, it was definitely Nvidia's entire week with GTC. Today is the Iren Bulls Day. Microsoft has signed a $10 billion deal for AI cloud with Iren. 5 years, and it's going to provide Microsoft access to the Nvidia Corp accelerator systems in Texas for Iren with a 20% prepayment. The deal is expected to generate approximately $1.94 billion in annualized revenue for Iren, so to call it $2 billion a year, using about 10% of the company's total capacity. But not just that. On top of Iren getting a $9 billion deal with Microsoft, you got Cipher, another Bitcoin miner turned data center HPC AI play. 15-year, 5.5 data center lease with AWS to provide 300 megawatts of AI capacity starting in 2026. This is pretty incredible to see. And the reason it's pretty incredible to see is because I think the whole narrative around these neo clouds has been one of the most important narratives this year. And a lot of people have been thinking, hey, what is going to happen with these companies and why are they getting this big of a premium? Where is the narrative going to lead? Where's the trajectory of growth going to lead? And eventually it would have to lead to these types of deals. And obviously the Nebius deal was the most important deal a couple months ago to show that this industry really did have a lot of momentum in terms of the supply not being as strong as the demand. There's a lot more demand, there's a lot less supply, and that's where the hyperscalers are going to have to go to these data center plays. As you can see right here, Iren is up 21% in the pre-market, and Cipher is up 19.84%. Cipher also had earnings. They missed on revenue. They beat on the EPS. They missed by like $5 million on revenue, so it wasn't anything too crazy. But they beat right there on EPS, as you can see, -5 cents versus, or -1 cent versus -5 cents expected, beat by 80%, 71 million versus 76 million. They missed by 6% on revenue. But the AWS deal is the most important. And that's why it's getting this excitement. Ironically, I published a deep dive yesterday about Nebius. I'll put that in the link. It's on Substack if anyone wants to read it. Iren is the next one that's on the list, but whether it's Nebius, Iren, Cipher, maybe the Clean Sparks, the Bitfarms of the world, all those other companies, obviously CoreWeave, Applied Digital, it really does seem, based on the news today, that there is validation in the neo cloud space. And it doesn't look like the demand is slowing down. Remember, the only reason Microsoft and Amazon are subleasing these deals to these contractors is because they don't have the capacity to do it themselves. Amazon literally just built an entire data center in a cornfield in Indiana that is going to exclusively exclusively going to go to use for Anthropic to train their models on their Trainium chip. So if Amazon wanted to build their own cloud, and obviously they have built their own cloud, but if they wanted to build separate data centers that leverage AWS and deploy them against these companies that have the demand for AI workloads, they would do it. If they can't do it, which is what Jassy said, I mean, they just don't have the capacity because there's way more demand outstripping supply. AWS growing the fastest since 2022. They're going to have to use third parties. One take on this Iren deal from an Iren bull on X. He said, arguably, this is the best among all the deals announced so far by peers. We didn't have to give away any warrants or equity. We'll have 20% of prepayments to discount on 3 to 5 years. Dell is most likely financing a large part of the $5.8 billion in GPUs that was announced on the earnings call, which was going on over the past hour. So Iren's not even going to have to pay for all the GPUs. They're going to have to pay for some of it, but Dell seems to be financing a good part of it. And we're still at 12% of committed power for $2.5 billion of revenues at 85% margins. AKA, there's another 88% of that Texas facility that can be licensed to any other hyperscaler that's out there. And if that's the case, then obviously that's a lot more revenue coming into Iren. So very, very exciting to see. If you are an Iren bull, congratulations. Today is the day you've probably been waiting for a long time. Obviously, these stocks have had to, correct a little bit over the past couple of weeks as there were no deals and, there was speculation on if they would even get a deal. And those were dip buying opportunities for those that believed in them. And if you believed heavily, you've been able to do well. Cypher right there up 21%. Iren up 20% on the day. Dragos, thank you for the $50 super chat. I believe Dragos is in Iren and Cypher, so definitely a fun morning for him. Obviously a fun morning for a lot of people that are in these names. By the way, Nebius also making a move, even though they didn't announce any deal. Nebius right there, 133.25. That's up 1.86%. But you got Nebius, that's up. Iren is up and Cypher's up. Now, one thing I will say, and I'm very curious to see what people are saying in the chat. Yes, Palantir is hitting a new all-time high in the pre-markets as well. Street's obviously getting pretty excited for earnings. Bitcoin and Ethereum are just being disgusting. Robinhood is somehow going green in the face of Bitcoin and Ethereum going down, which is quite incredible to me. I mean, like really over the past month, Robinhood has gone down with Bitcoin and Ethereum, but it's kind of diverging, which means that it seems like people are a bit more excited about the earnings, not just the crypto price action. Here's my question to everybody. Why didn't Microsoft give this extra $10 billion of capacity to Nebius? They already gave Nebius a $17 billion deal. Obviously, there's another $9.7 billion that Microsoft was ready to give out. Is the reason they gave it to Iren because of something specific about Iren and their facilities and their data centers differentiated from Nebius? Does Nebius not have the capacity to give them that extra $10 billion? Or is it, as a lot of you guys are saying, diversify the risk? I mean, yeah, that's kind of my gut reaction as well. So I don't think it's bearish that Nebius is not getting it. But it was one of those things. It was Microsoft. So I was like, okay, it's the same hyperscaler. So it seems like, I guess they wanted two different parties. If a data center goes down, concentration risk. Okay, so here's the thing. And this is what I wrote in my Nebius deep dive. First of all, I'll give a lot more thoughts on it later, but I am turning very bullish on Nebius. 130, the valuation doesn't really scare me that much. The one thing that scares me about Nebius, and it's not just Nebius, it's all these data center plays, is that if you look at their valuations, they don't make sense unless they get more of these deals. That's just facts. None of these valuations make sense unless they, like Iren starts to make a lot more sense now that they got this $10 billion deal. Cypher makes a lot more sense now that they got this $5 billion deal. Nebius would not make any sense if they didn't get not at this valuation, the $17 billion deal from Microsoft. So the thesis that I got from a lot of these is that they need to get multiple deals. And that's why you've got to be a massive data center AI bull. You have to believe in this thesis if you think that buying these stocks at this level gives you more upside, because you're assuming they will get more deals. But I think the biggest risk to the Nebius thesis right now is like they need to get the next Microsoft deal. And if they don't get it, like, yes, they have a lot of other assets and ClickHouse and all that, and that stuff is good, but it's not the icing on the cake, which are these data center deals. And that's the same for a lot of the other hyperscalers, or a lot of the other Bitcoin miners that have turned into data centers plays that need deals from the hyperscalers. So I think if you're in these names, the number one thing you're tracking, and it's similar to, if you're in any other name that needs certain deals to keep the deal flow going. If you're in SoFi, you need to make sure they keep adding more users. If you're in Nebius or Iren, you need to make sure they keep adding more of these massive data center deals. That is what is holding these stocks up. And the fact that Iren and Cypher finally got these deals today is very, very exciting. APLD, CoreWeave. I mean, CoreWeave got a $14 billion deal a couple of weeks ago. I did a lot of comparisons between CoreWeave and Nebius in the deep dive as well. I think Nebius is a far superior business model than CoreWeave, to be honest. I mean, like CoreWeave is bigger and they have better relationships with different industry players, but I think Nebius is just more diversified. And I mean, quite frankly, I do think I would buy Nebius over CoreWeave. I know Jose likes CoreWeave more, but yeah, they just need more of these deals. And it seems like they are continuing to get these deals. So there you go. Congrats to those who are in the Iren thesis. You got your Microsoft deal. Very, very awesome day. And, the stock's up 20%. Hopefully that is able to maintain its momentum. Who knows? Maybe this expands even further as you get a lot more new buyers coming into the stock today based on this. I mean, we saw what happened with Nebius after the Microsoft deal. Now, Nebius wasn't up 500% like Iren is before the Microsoft deal, but still it was up a decent chunk. And then Microsoft deal completely re-rated the company. And maybe that happens with Cypher as well, based on that $15 or $5.5 billion 15-year deal with Amazon. Yeah, TeraWulf also getting some love. They got a Google investment along with Cypher a while ago. TeraWulf, pretty much all the Bitcoin miners that are data center plays. You know what? We're just going to add CoreWeave to this, and Nebius, and APLD. So we'll just call this, we'll rename this data center plays. But all of those going green right here. Okay, BitMine. What's going on with BitMine? BitMine is going down. Why is BitMine going down? Because Ethereum is unfortunately going down. We do have an update on BitMine. Tom Lee bought 82,000 Ethereum last week. He now has 3.4 million ETH. 2.8% of the overall supply. And here's what he said. Ethereum fundamentals continue to strengthen at an accelerating pace, with stablecoin supply on ETH rising 15% in the past 8 weeks. We actually looked at some of those charts yesterday. And application revenues reaching an all-time high. Most of the time, price leads fundamentals, but at times fundamentals drive ahead and price converges higher. Crypto suffered its largest ever liquidation event on October 10th, and open interest on Ethereum had the largest decline in the history of ETH. It fell 45% in the past 8 weeks. This reset is healthy and sets the stage for price and fundamentals to eventually converge. AKA Tom Lee is saying, look, I know Iren's going to the moon because they got to deal with Microsoft. I know Cypher's going to the moon because they got to deal with Amazon. But you should still trust in Ethereum because everything's going well. It's just the price action is not cooperating, which, I mean, quite frankly, he's right about. If you look at any of the metrics in regards to stablecoins, tokenization, supply of stablecoins on ETH, or application revenues, ETH is at all-time highs, essentially. Or I should say the ETH network is performing at all-time highs. What's not at all-time highs is the price of Ethereum. And so this is the network activity for Ethereum on stablecoin supply and application revenue. At its core, you either have to ask yourself now, do you really believe that the price will eventually converge with the thesis, like has happened so many times for many stocks that have not performed even though their fundamentals were in the right place? Or do you just think there's better places for your money? I mean, you have to ask yourself that question right here. But at its core, Tom Lee continues to acquire. I think by February, they're probably going to get to that 5%. They're going to start staking. And if Ethereum continues to converge with that price action, then BM&R likely does well. But that is the update you have right there on BitMine. Speaking of Tom Lee, he was on CNBC this morning. Here's what he had to say about where he thinks the equity markets are going towards the end of the year.
Yeah, that's right. I think the market has a lot of walls of worry because we've got the shutdown, we've got China, we got the Fed speak, but the market's been up 6 months in a row now. Only 6 times since 1928 that's happened. So if you look at November, we're up 5 or 6 times. And in 1942, it was flat. So basically, November should be really strong. I think at least 200 points on the S&P. So maybe
for November.
Yeah, maybe even 250. So maybe we get to 71.
See, that's a call that I just wish you wouldn't make a call like that, right?
Well, you could
250
into 3% if that makes you feel better.
It does make me feel a little bit better because 250 points to say in November, 250 points. You're giving a time and a size.
But maybe we wobble the first couple weeks just to digest all the games.
Yeah, that's what I saw in your notes. So initially there could be some choppy trading at this point. What's driving everything? There's still, I guess, sentiment is not positive, is it? You mentioned the wall of worry.
Yeah, I mean, if you look at it, like AAII, the average sentiment this year is still minus 11.5, like net solidly bearish. That's only happened 3 other times in 35 years, all in the middle of bear markets. So investors feel like it's a bear market, but we're up 17%, which kind of tells me I think there's a big performance chase into year end. You know, over 80% of fund managers are missing their benchmark this year.
Wow. And you don't care about not...
Hold on, guys. I got to pause it because we got a headline. Is this real? Is this real? Oh, my goodness. This is why Wall Street is the greatest show on earth. Ladies and gentlemen, Amazon breaking 52-week highs, $38 billion deal. You know who they did a deal with. You know who they had to do a deal with to finally get this stock to move. Ladies and gentlemen, OpenAI. Open freaking AI. Oh my goodness. Amazon and OpenAI, $38 billion commitment. OpenAI will expand compute capacity while benefiting from the price, performance, scale, and security of AWS. This is why you got to love the stock market. This is why you've got to love the stock market, and you've got to love it in an age of AI. This is one of the most incredible times to be an investor. Wow. 38 billion commitment. Add that to the 1.4 trillion of commitment OpenAI already has for Amazon, or well, particularly for AWS. So now OpenAI has committed to Oracle, AMD, Nvidia, Broadcom, GCP to an extent, and now add AWS to the mix. Basically, OpenAI is saying we want to have good relations with every hyperscaler, and we are ready to start throwing around dollars to each one of them because we need demand, or we have so much demand, and we need the supply for that compute. Let's get some coverage on this, but wow, quite incredible to see. Is Nvidia moving based on this? Nvidia 207. Nvidia got a street high price target from Loop Capital to 350. We'll talk about that price target in a second. But Nvidia right here getting a little bit of a move as well, given Amazon up 5%. It's surpassing the highs it hit on earnings when they had 255. Chad says right here, seems a bit overcommitted. I think that's what we're all thinking, but nonetheless, it seems like they continue to commit. Wow, Amazon right there, 259 going for 260 because they said the magic word, and that magic word is OpenAI.
Hey, Carl. So OpenAI has signed a $38 billion infrastructure deal with Amazon Web Services, marking its first contract with the cloud leader and the clearest sign yet that it's no longer relying solely on Microsoft for compute. Now, under the agreement, OpenAI will immediately start running workloads on AWS, tapping hundreds of thousands of Nvida GPUs across U.S. data centers. It'll begin with existing capacity, then expand over time, with AWS planning to build out new infrastructure specifically for OpenAI's use. I spoke to Dave Brown, who heads up compute and machine learning services at AWS, and he stressed to me that unlike some of the $1.4 trillion in compute deals that OpenAI has signed lately, this capacity is already live, not just a future-looking partnership. Now, until January, Microsoft was OpenAI's exclusive cloud partner. That later shifted to a right of first refusal, which expired just last week. Microsoft did reaffirm its role with a $250 billion commitment from OpenAI to keep scaling on Azure. Now, by comparison, the AWS deal is smaller, but arguably more consequential, signaling a strategic shift toward a multi-cloud future. OpenAI has also signed with Google and Oracle. Guys?
Mac, appreciate that. Mackenzie Sagalos with news regarding OpenAI and Amazon. Jim, that didn't take very long.
Dude, this is crazy, bro. This is crazy. Amazon and OpenAI announced multi-year strategic partnership with a $38 billion deal for AWS. Looks like OpenAI is diversifying their essentially cloud workloads across every cloud that's out there. There you go. I mean, look, this gets into the controversy of what happened over the weekend when, what's his name, Sam Altman gave a pretty ugly response on a question. We'll get back to Tom Lee in a second. Let me just show that to everybody. Basically, Brad Gerstner, one of the earliest investors in OpenAI, asked Sam about, why are you guys only doing $13 billion in revenue, but committing to $1.4 trillion in spending? And here's what Sam Altman said.
How can the company with $13 billion in revenues make $1.4 trillion of spend commitments? And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. If you I just, enough. People are, I think.
That laugh from Nadella was not a real laugh. That laugh from Nadella was an awkward, let me try to laugh so that this awkward moment doesn't become as more awkward because of Sam just telling one of his earliest investors to fuck off and go sell his shares. That was the laugh coming from Nadella. I don't think that was actually funny.
I think there's a lot of people who would love to buy OpenAI shares. I don't think you would,
including myself. Including myself.
People who talk with a lot of breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. We do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So,
Look, Look, it was a weird answer. I think it was an opportunity for Sam Altman to literally just be like, hey, we have a lot of trust from people like Satya and Jensen and Lisa Su and Hawk Tan. And because they believe in us, the media can say whatever they want. But at the end of the day, as a company, we're going to keep executing. We think we're going to do a lot more than 13 billion in revenue. And those numbers are not necessarily accurate, but we're going to keep working and do what we have to do. I think he could have just said that and had a very easy, charismatic answer. And he went the asshole route and, it didn't really land the way I think he wanted. But at the same time, no one can deny that OpenAI is the linchpin for all the spending that's going on right now. And a $38 billion commitment to AWS, the reason Amazon is moving right now is because that likely increases the analyst estimates for cloud growth, which already beat the whisper numbers of 18%, coming in at 20.2% back on Wednesday when we had the earnings. So regardless of what you think of Sam Altman, and that interview definitely made him more unlikable, he is the one who has committed his company to spend almost $2 trillion across all the hyperscalers. And if you're invested, like I said this last night, but if you're invested in AMD, that stock's probably still at 150 if they didn't do the OpenAI deal. The reason that thing's a $400 billion market cap and has created so much more wealth for particularly retail investors this year is because of OpenAI. So we are seeing this experiment play out in real time. Ultimately, OpenAI has to win in order for this funding to take place. He did also hint that they're probably going to have about $100 billion in revenues by 2027, which means if you look at the amount of compute spend that they're pledging for, it's about 10 times the revenue. It's not as crazy as like 30 times the revenue if they only did about 13 billion, but nonetheless, they're going to have to win in order for all this to play out. S&P 500 right there, 685. The big news of the day, Amazon up 5% on an OpenAI $38 billion AWS commitment. And as a result, that stock is making its move. Let's get back to Tom Lee, and then we will keep going from there.
Having government data, because does the market ever really wait for government data? Or it sort of sniffs it out, doesn't it?
Yeah.
The all-knowing market.
That's right, because we have good Fed futures to look at what's implied for inflation. The Fed looks at the bond market. The bond market figures things out before the data comes out. I do think the inflation is probably falling a lot faster than everyone expects. You can look at Trueflation, and we're down to sub 2% inflation, excluding housing.
Shelter, yeah.
Yeah, and shelter is finally cracked.
Yeah. Because that CPI number was, it was just barely cooler than expected, wasn't it?
Yes, but the shelter piece is now at 0.16 month over month. That's at 2% year over year. That level would bring core inflation down sharply. And over 54% of the CPI components are now deflating. It's the highest percentage since COVID started.
It seems, Tom, that the markets have, largely because of what you're describing, moved on from the inflation watch.
Yeah.
They've kind of put that aside as maybe the forefront risk, and much like the Fed has been dragged to doing, wondering about downside risk to growth. If you just look at things like the reaction of home builder stocks, consumer cyclicals, regional banks, just to that hawkish cut by Powell last week, it seems like it's not hard to get the market a little bit uneasy about, just exactly what kind of a soft patch this is, even if we have confidence that maybe it firms up into next year. So how does that play into the overall action in the index and what you expect from the market?
Yeah, I think there is something the market's trying to figure out, which is AI is consuming jobs, but that's turning it into profits for corporates. So profits are expanding. And then we have profit margins have actually been going up in the middle of tariffs. So how are companies able to take 70% of the tariff hit, but margins are going up? So there must be a productivity boom somewhere. And then we have, like you said, $7 trillion of cash on the sidelines, but we have high rates. And so the Fed, I kind of think, is trying to not overheat the economy, but we know that you just point out, housing's in big trouble. So I would say it makes sense if inflation's in a good place and jobs aren't really strengthening for cuts to happen, and that would be really dovish. So I think that sort of comes together before the end of the year.
Andrew.
Hey, Tom. Have you been reading all these stories that just been out, recently here about how the Fed is doing all of this sort of repo activity, like a lot of repo activity, and I just wonder what that really means for both the markets and maybe even for crypto. This is a ton of money. It looks like something like $30 billion just to ease liquidity concerns. This is, past couple of days kind of thing.
Yeah, it is pretty typical into month end, right? That's what what we are seeing, and I think that some of these numbers are also being distorted because of the government shutdown. So we know that the Treasury reserves are building because there aren't any payments being made. So it is something we're watching, but if I was to say that there's signs of bank stress, I'd also be looking for high yield spreads to be widening, and those are actually staying pretty calm.
So you figure no problem with 7,000 by the end of the year, more likely something even above that in your view? Like what, like 7,300?
Yeah, I mean, maybe 7,300, 7,500.
7,500.
Yeah, so we still, in December, we would build on those November gains.
See, Santoli's like, no way.
No, I don't say no way. I'm open-minded to how far bull markets can go, right? Strong years end strong. We all know about that. The one piece of it I think it's worth kind of struggling with a little bit, though, Tom, is you can look at the AAI surveys, kind of what people are saying, and then you see, equity exposures in, Bank of America private client accounts are basically at their highs, right? So people have kind of, in aggregate, been riding this to some degree. And then you see a lot of what we've talked about in the last several months of, this kind of upwelling of speculative action in non-profitable tech stocks, low-quality equities leading. That's not the Mag 7. That's like a lot of other marginal stuff. So how do you jibe that with that sense that people are still skeptical?
Yeah, I mean, one, we know there must be skepticism because if people were bullish, the institutional fund managers should have better performance. But as you know, this is one of the worst years for fund managers in almost 30 years. I think that there is also kind of problems in private markets. So I think private credit is doing terribly, and I think a lot of LPs in alternative funds, whether it's venture or private equity, are pretty disappointed by the returns, like the 5 years into now. But the stock market's done well. So I think that there is bearishness because like private equity hasn't come through and fund managers are doing badly. But you're right, the ones who stuck with public stocks are doing well.
I want you to quit while you're ahead, but I have to ask you about Bitcoin. I mean, you want to go out on a limb there too? Because it's weak again today, 107. Go below 100 or no?
Well, Bitcoin, I mean, if I look at everything since October 10th, because that was the biggest liquidation in the history of crypto, like bigger than FTX.
Like a margin call almost.
Yeah, it was like almost a miniature rupture, like a tsunami. We're only a couple weeks from that, so I think the market is consolidating. But if I look at fundamentals, like Ethereum, stablecoin volumes have been exploding, application revenues at all-time highs. So right now, fundamentals are leading price in crypto. So I think eventually we consolidate and then we rally into year end.
All right, so that's what you got from Mr. Tom Lee. Again, if you're just joining, Amazon has signed a $38 billion contract, or at least commitment, I should say, with OpenAI for a strategic partnership, committing $38 billion to AWS. OpenAI continuing to diversify their AI workloads by partnering with every cloud. Iren signed a $10 billion deal with Microsoft. Cypher signed a $5.5 billion deal with AWS. I mean, it's just incredible to see the amount of data center spend that's going on. And the company that is, at least in the public market, showing the benefit from all that data center spend, aka the use cases of AI, because what's the point of these data centers if there's not actual use cases for businesses, is Palantir, which is at a new all-time high in the pre-markets. Palantir will be having earnings after the bell. I'll be live at 3:30 Eastern. For a lot of you guys internationally, you're going to have to adjust by an hour because the United States just lost an hour for daylight savings time. So the market open is going to start an hour later for a lot of people internationally. But it's still the same time in the U.S. It's just we have this daylight savings thing. So that's why it's an hour back. But you will have Palantir after the bell. Then you got the S&P 500 right there up 0.43%. Now, the fact that Tom Lee said 7,500 is possible is quite incredible. Do I think we'll get 7,500? I don't know. I think, 7,000 is less than 2% away. So it's not crazy to imagine that we could get 7,500. We would just need to have a bombastic quarter from Nvidia. And speaking of Nvidia, let's talk about the new Nvidia upgrade that we got today. By the way, take a look at this. This is a tier list that people put out for all the different data center companies. And as you can take a look right here, there are deals across the board with pretty much all of them. Some of them obviously larger than other deals, but CleanSpark, TeraWulf, Cypher, Riot, Applied Digital, Iren, Nebius, CoreWeave, all of these guys, Hive, Hut 8 Mining, they're all just launching more and more deals. And again, I think the bull case for a lot of these companies is if they can continue getting more deals, and if you believe in this AI future, they're likely going to. which is, where the investment thesis ultimately comes in for most of these names. Now, Nvidia, what happened with Nvidia this morning? Well, Nvidia got an upgrade from Loop Capital. Loop Capital has always been the most bullish on the street for Nvidia, but you had a couple of companies put up their targets from 270 to 320, and Loop Capital today came out and said, we're going from 250 to 350, implying 73% upside while keeping a buy rating. The analyst expects Nvidia to double GPU shipments to 2.1 million by early 2026, with rising prices boosting revenue, and all these smaller data center deals are signaling that Nvidia likely is going to be able to meet those targets. They also said Nvidia is leading a new golden wave of AI demand, but warned of risks from power limits, real estate, and regulation. Nadella on the Brad Gerstner podcast this weekend said the constraint is not compute anymore. The constraint is power. And so power seems to be the bottleneck, which is potentially where the next big opportunity is in regards to the investment case for the data centers. He also believes that Nvidia will remain strong through the Blackwell chip cycle, with 400 as a possible long-term target. Nvidia shares are up 51% this year, and most analysts continue to remain pretty bullish on Nvidia. So it's quite incredible to see, as Austin says, compute supply that comes online gets instantly bought, which is why these Iren and Cyphers and Nebiuses and CoreWeaves just continue to get more and more deals, as if they have capacity ready to offer, that capacity ends up going to some of these hyperscalers that need them. Amcor, 3420, that's green as well in the pre-markets. I think the reason this is green is basically because Jensen has been speaking very deeply about American reindustrialization and how important it is for America to continue to reindustrialize. And this is what he said yesterday when asked about China on Fox News. He's still guiding for no China revenue, but he is pretty excited for the U.S. to engage in reindustrialization for semiconductors.
Meeting a milestone deal, a historic deal, and the readouts from all the news that I've read, just the respectful, the friendly relationship that they've built between the two presidents, and of course between the two countries. Therefore, the post from Secretary Hegseth and all the readouts from Secretary Bessent have all been extraordinary. This really creates the conditions, I hope, for Nvidia to be able to go back and compete in market in China. Trump 45, in President Trump's first administration, he set the tone perfectly for America to lead in technology and make sure that American companies have the best and first, but for American technology companies to go around the world to compete and win. In the last 4 years, the administration really set us on a path that really backfired. The policies have really backfired. From a 95% market share in the China market, which is one of the most important markets in the world, when President Trump left office, NVIDIA's market share in China is now 0%. And so this is really time, and it's a great opportunity for us to reset back to the Trump 45 policies. For the Trump 45 policies where American AI companies are able to go to China, compete in the marketplace.
Now, Trump has not officially confirmed that NVIDIA will be able to sell into China anytime soon. So all of this momentum on NVIDIA is happening without the data centers and all the other data center stocks, without China revenue being included into the guidance. But Jensen is optimistic that American reindustrialization will happen. And at the same time, they're going to get back to some policies that they had a couple years ago, with China being more friendly to the chips that won't be banned via export controls. Now, the Trump administration did put out a fact sheet on Saturday. Donald J. Trump strikes a deal on economic and trade relations with China at its core. Essentially, the most important thing is that China is going to suspend all the retaliatory tariffs, and they're going to suspend new rare earth export controls, which was one of the biggest reasons why we had that October 3rd or October 10th 3% drawdown, is because of these export controls. And then the U.S. is going to lower some of their tariffs on China. I don't know if this is a massive official deal. It looks like a framework of a deal. I don't think anything officially has been signed. There's no mention of NVIDIA or semiconductors. Trump did say on Air Force One yesterday that Blackwell shouldn't be sold to the countries that are our competitors to the United States. Maybe he just said it in a nonchalant way, but maybe he also said it in a way that implies that, NVIDIA is not going to be allowed to be able to sell. Jensen also said that, he's having good relationships with the Chinese officials. So I think it's going to take probably a few months to figure out what happens with NVIDIA and China revenue. But so far, that has not been guided. And one of the reasons I think China is starting to capitulate with the United States is because take a look at what happened yesterday. China's manufacturing activity on their index expanded less than the forecast in October, according to a private survey. contrasting with the official poll, adding to worrying signs about the economy's momentum as 2025 winds down. A lot of Chinese stocks are down in the pre-market. Some of their major indices like CEX were also down yesterday. And it's because they just didn't have a good report. And that good report, I think, is why Xi Jinping didn't really have that much of a hostile relationship with Trump going into that South Korea meeting, because they've been in a recession for the past couple of years. They've had a lot of stimulus to try to get rid of that recessionary headwind, which the stimulus has helped. It's not completely gotten rid of the recession. And then when you get a report like what you got yesterday, where their manufacturing index is down as much as it is, I mean, it's almost equivalent to if ISM in the United States came in below 40, which, you know, below 50 is already contracting. Below 40 would be really bad. That's kind of what happened to China yesterday. And so they kind of have no choice but to negotiate in a way that is friendly with the United States, because they need the American consumer. And I think Trump knows this. And as a result, you're likely getting those export controls that are going away and a little bit more momentum for the United States on the trade deal. Google right there is up about 0.3%. Reddit's up 1%. Amazon still moving on 4.9% in the pre-markets based on this AWS deal. Even Meta getting a little bit of a bump. No headlines on Meta right there, but 656, that's up 1.32% as well. So there you go. That's what we got in the context of China and Nvidia. Again, Amazon with this massive deal, and that's also very exciting for OpenAI. MongoDB, 7.32%. Did these guys have earnings? I don't think they had earnings. Usually they have earnings after hours, but that's doing something. MongoDB named a new CEO. They expect Q3 results above the high end of guidance, driven by continued strength in its Atlas cloud business. Okay, so I don't think they put out earnings yet, but it looks like they gave a little bit of a preliminary guidance, and as a result, that's why that stock is up 7%. New CEO. Okay, there you go. Sometimes you get a new CEO and the stock tanks, but sometimes change of management is not the worst thing in the world. So I think the theme of today, we got 7 minutes until the market opens, are the data center plays are not slowing down. I mean, the fact that Nvidia is above $5 trillion, even without China revenue, even after a China deal with the US has not officially confirmed that Nvidia will be going back to selling in China. And Jensen, you know, is taking it like a champ, and he's parroting the administration and basically saying that he believes in American reshoring and reindustrialization, which is helping stocks like Amcor get green. Even with the lack of those China revenues, the fact that these data center plays are continuing to explode, like in Iren, Nebius, CoreWeave, et cetera, based on the deals we got this morning, is quite impressive. And it goes to show how much demand truly might actually exist in this region. Not to mention, we got another headline this morning. The US will allow Microsoft to ship NVIDIA AI chips to use in the UAE for the first time. So NVIDIA is still finalizing agreements with the United States and the Secretary of Commerce, Howard Lutnick, to be able to sell into the UAE. The Secretary is waiting for the United Arab Emirates to actually invest the money that they promised they were going to invest into the United States before they get NVIDIA chips. But Microsoft is able to ship those chips now based on this reporting by the Financial Times, which is another reason that NVIDIA is up, because now UAE is also not factored into any of the guidance. If that comes in, you know, and then China maybe comes in closer to the end of 2026, that could be obviously very, very bullish for NVIDIA. I think this is a crossroads for most investors. Do you believe this AI revolution is real? Nebius deal, CoreWeave deal, Iren deal, Cypher deal, now AWS and OpenAI deal. I mean, you either believe it's real or you don't. And believing it's real doesn't mean you have to love the valuations on these names, but it definitely means you probably have to get a lot of your money out of the market if you think it's all fake, because you're going to have a pretty epic market collapse if none of this stuff ends up playing out. If you think it's real, then it's subjective which stocks you pick to play the theme, but it does mean you've kind of got to be in the market, because this is the theme that's going to be carrying the market. One could argue for at least the next 5 years, if not for the next decade, if this ends up playing out. What do you mean by is it real? Well, I mean the sort of classic bearish talking point that there's no ROI on AI, right? Again, this Iren deal doesn't matter if there's not an ROI from the hyperscalers and the companies that are using the AI workloads of the hyperscalers. There's no point to have a data center. There's no point to reconstruct a Bitcoin mining facility into some AI HPC play if there's not a use case or there's not a return on investment for the companies that are contracting with AWS or Azure or GCP, or for the hyperscalers themselves. So it has to work. It really has to work. And if it doesn't work, then this is going to be the biggest bubble in history. I personally am on the side of thinking it is going to work. I think there's more than enough use cases that we are seeing pretty much every day that are being stacked on that it's going to work. Do we have that killer application yet? Probably not. I guess you would say that's, the ChatGPT, the LLM. Obviously, self-driving is going to be really important. Robotics is going to be really important eventually when Siri scales and we have an AI personal assistant. That's going to be really important. Agentic workflows inside of the enterprise that Palantir has showed off very well, and a lot of other software companies are beginning to scale. That is a use case. But I think a lot of people are waiting for those massive, massive game-changing use cases. And I think those are coming over the next 5 years. But this is a moment where you've either got to believe it's happening or not. And it will depend on, I think the entire thesis of your portfolio on if you believe that there is a future for this or not. Grab will have their earnings today as well after the bell not after the bell, at 7 p.m., 7 to 7:30. So I might be live for it. I might not be. If I'm not live because it's right after Palantir, we'll obviously talk about it Tuesday morning and we'll get into all the results. But the earnings are today. Every brokerage that's telling you it's November 14th is wrong. If you just go to the website, it'll say November 3rd. So 7:30 tonight Eastern, we're going to see what happens with Grab. Robinhood, they officially announced Sage Home Loans partnership to democratize access to home ownership. This is also very exciting. So Robinhood was giving people a 0.75% reduction on the national average mortgage rate, along with a $500 closing cost for their loans and their mortgages. Over the past couple of months, it was in a pilot phase. It is now official. The director of partnerships at Robinhood says, through our work with Sage Home Loans, we're helping reduce financial barriers to home ownership and empowering customers to build wealth through one of life's most important investments. And as a result, it seems like every financial decision that you are operating in, Robinhood wants to be a part of. And so this was a pilot. It is now expanded into something that is much more real than a pilot. 27 million people will have access to get a mortgage with Robinhood at a discounted rate. And I know there's a lot of other companies doing discounted rates as well. I'm not saying this is the most special deal. The point is, if you're already integrated in the ecosystem and they're offering you a new service, you got a lot of people that use Robinhood for a lot of stuff. They might say, all right, I'll get my mortgage with Robinhood. And so it's just ancillary services in addition to banking that's going to be rolling out next is very, very bullish for the overall industry. And as a result, that's why you're getting some excitement right there. By the way, you got Cantor that has just upgraded Iren to 142. Take a look at that, from $60 to 142 for Iren. And that one is getting an upgrade as well based on this deal with Microsoft. It's pretty freaking incredible, dude. Iren right there, 72.87 on the day. And that's up 19.95%, getting an upgrade by Cantor. AMD is making a move right here. We got about 1 minute until this market opens. There you go, AMD 259. Again, Amazon, that's the big deal of the day. Got about 30 seconds until this market opens. We are going to see how Amazon reacts, how Iren reacts, how Cipher reacts, how Nebius, CoreWeave. Today is the morning of data centers. And based on multiple deals, not even just one deal, multiple deals, look at Nvidia 208 coming out this morning. It seems like more and more people are excited for how this thesis is going to play out. So yeah, Micron 52-week highs. It's just incredible across the board with these data centers. Micron was disrespected for a long time. I remember summer of 24, this thing could get no love. And now it's one of the best performing semiconductor stocks over the past 5 years. Micron right there, up 4.62%. So there you go. Exciting stuff. Congratulations if you are in the data center space. Our data center plays. It is Monday, November 3rd, 9:30 a.m. Ladies and gentlemen, we are starting off the market for November, and the market is now open. All right, wake your ass up. Let's get into it. S&P 500 opens up 0.48%. On the day, 685.37. S&P all-time highs is 689.70. But the S&P 500 right here is green on the day. Palantir, all-time highs. It did hit 206, 205.70 right there on Palantir. You're getting a move. We do have earnings after the bell. We're going to see what happens with Palantir. 205.15 on the day as it crosses through that 205 level, up 2%. Robinhood, even with Bitcoin and Ethereum not doing well, maybe that Sage Home Loans partnership is one of the reasons the street is looking past the crypto price action and giving Robinhood some more momentum. Wednesday, we will get their earnings as well. Nvidia up 3% on the day. We did hit 212 last week, 208.89 on Nvidia. AMD, that's up 1.5%. Grab right there is up 0.5%. Reddit's up 1%. Amazon, 5% on the day. with the OpenAI partnership for $38 billion. Let's go to our data center plays and let's see what's going on. Iren 73.37, 20.4, 75 is an all-time high for Iren. That is green. Cypher 22%, CleanSpark 5%, Wolf 3%, Hive 4%, Bitfarms 9%, Marathon 1%, Galaxy 2%. CoreWeave's actually down. Weird. CoreWeave's down. Nebius is up 2% and Applied Digital up 1%. It's almost like people are selling CoreWeave for Iren today, even though CoreWeave has tons and tons of contracts, more contracts than Iren. So I don't know why that's being sold off, but nonetheless, CoreWeave, the only red name in a lot of the data center plays. Everything else is going green. Iren right there at 72. Where is Ethereum? Ethereum is at 37.19. That's why BMNR is probably at 44. BMNR is about to lose 44. My goodness, 44.07. Amcor getting some love, baby. Look at that, 34.99. Congratulations to those in Amcor. This one is still cheap, in my opinion. It's trading at 1.2 times sales, and it's one of the only package suppliers for TSM in their Arizona factory. And so that's why Amcor is getting some love. Amcor right there, 35.06. That's up 8% on the day. Not too bad for Amcor. Bitfarms right there up 8.4%. CleanSpark up 4.7%. Then Iren up 18%. SoFi goes red. Grab goes red. Google just went red. Then it recovered. So you got a lot of names that are already starting to lose some of the green momentum. Amazon is down from the highs. It was at 258. Now it's at 256. Salesforce green a little bit. PayPal green a little bit. Apple was red. It just turned green. SMCI up a little bit. AppLovin, that's up 1.2%. Coinbase is down 2%. Weird. Coinbase is down, but Robinhood's up. Bitcoin and Ethereum are down, so I guess that's hurting Coinbase and MicroStrategy. ASTS, I don't know why that's down 4% on the day, but that's losing some momentum. Uber's up a little bit. Hims is up a little bit. Robinhood's still keeping 147, and then Palantir keeping 204. Oscar is down 2.5. Okay, wow, Oscar. I don't think we've seen 17 in a minute. It was holding 18 pretty well last week. UNH then, that's probably down. Yeah, UNH. Wow, UNH below 340. I think this is because of the lack of clarity on ACA subsidies because of the shutdown, which in a couple of days, the shutdown will be the longest shutdown in history. And Molina Healthcare obviously had a crappy earnings last week. That one continues to go down. Cigna also didn't have the best earnings. So the residual effect of some of those healthcare plays, along with the fact that the shutdown is taking place, that's likely hurting a lot of those names. Rocket Lab, what do we got on the lab of rockets? 6218, that goes red. Actually, we're seeing a lot of names go red, folks. We're seeing a lot of names go red. Nvidia is holding on. Palantir is holding on. Hood is holding on. AMD is holding on. Grab went red. SoFi went red. Reddit's barely holding on. Amazon holding on because of this AWS news. And then Meta, thankfully, is getting some green. They took Meta to 645 last week. The Bitcoin mining plays, they are losing some of their momentum. 18% is not something you can be upset about, but it is still below that all-time high. And then Cypher still up 20%. Beyond Meat, is that going red? Beyond Meat falls another 13%. Unfortunately, there are some accounts on Twitter, I shared that on Friday, that are loaded up with like 900,000 shares of Beyond Meat. It is still shorted more than the actual float, so there is a sort of GameStop component to it if the people were to come together and, you know, squeeze the hedgies. But you got to get someone that gets people really excited about doing that. And I don't know if there's a roaring kitty of Beyond Meat yet. Cypher right there, 22.35, that's up 19%. Then Iren up 17%. Amcor right there, 35.46. Wow, what a day for Amcor, dude. What a freaking day. There you go, 9.7. I think the reason this is happening is not anything fundamental. Obviously, the earnings were pretty good, but it's Jensen over the weekend talking about how important American reindustrialization is, and Amcor is one of a handful of plays to get access to American onshoring in semiconductors. So I think that's why that one's getting the move. Alphabet right there, 281, going a little green. S&P 500 losing a bit of its momentum from the highs at 685.80, now at 684. Amcor got a price target upgrade to 62. Okay, I did not see that this morning. I'll check out who put out that price target, but yeah, that's also probably another reason why that's moving. Robinhood just went red. BMNR, oh my, this is ugly. This is ugly. You know what's happening right now, given Ethereum's flat? You know what's happening? Bitmine is losing a bit of its MNAV. That is what's happening right here. The MNAV multiple is contracting. Look at that, 1.26. It was holding 1.4 for the majority of basically, call it what, like 6 weeks, roundabout 6-7 weeks of course 6-7 weeks. I'm sorry guys. I'm sorry I said that. I'm sorry for the adults in the chat that I said that right now, because you might see something in the chat that annoys you for the next couple minutes. But yeah, Ethereum right there, 37.12, and that one obviously is getting hit. BMNR getting hit as well. Apple right there, Apple losing 270. Some weird price action today, dude. Google's barely up. SoFi, I don't know why the hell SoFi down. Like, why does SoFi deserve to be down? Doesn't make sense to me. Amazon's, the only reason Amazon's up is because of this OpenAI deal. So you got to see how long investors continue to care about that. And then Meta getting a little bit of love right there, up 1.1%. Bitfarms is up. That's correct. A lot of these data center plays are getting the residual impact of the Iren. Oh, look, here's the thing. If Iren and Cypher just got multi-billion-dollar contracts, multi-billion-dollar deals, you would imagine the streets saying, hey, Bitfarm's going to get something. TeraWulf's going to get something. Galaxy already has a couple. Maybe Galaxy gets another one. Nebius obviously already has a big one. Nebius potentially looking for their next one. Same thing with Applied Digital. These names have already moved a lot this year, but the anticipation, just even from a sympathy trade perspective, will be, all right, if I missed Iren, I missed Cypher, I missed Nebius, I missed Applied Digital, maybe I get into Bitfarms. Maybe I get into Riot. Maybe I get into Hive and see what can happen from there. But that's why you're getting a lot of those numbers get to the upside on these data center plays. Navitas right there. Wow, why is Navitas down 6%? Not sure about that one. They announced a NVIDIA partnership about 2 weeks ago. That's what got the stock moving. They have earnings today after the bell. You know, a lot of companies that have earnings today are going a little bit red, as the street's probably taking them down a bit before they put up the numbers, which is actually fair to do. I mean, that's not a horrible thing. But Navitas will have earnings today after hours. And we're going to see what ends up happening. Google right there at 281. Sam, I see you in the chat. I'm going to send you a link if you want to hop on for a couple minutes. Sam is someone who is long all three, Nebius, Iren, and Cypher. So Sam, if you want to hop on for about 5 minutes and just give us your take on what happened this morning, feel free to. And we'll get his perspective. S&P 500 right there, 684. Nvidia, 207.93. Tesla at 460. Tesla going green after the reversal. It was at 453. And now that one going green. No, it's not going to be Sam Altman. If I asked him a question he didn't like, he might tell me to you know, F off, given he tells his earliest investors to F off as well. So kind of afraid to ask Sam Altman a nice question. Sam, what's up, man?
I like the guy who asked if it's Sam Altman.
That'll be funny if it's Sam Altman. You know, that would be fun.
Oh, man, dude. What a day. What a day.
Let's just get started with it. What is your reaction to all these deals? You can start off with Iren. I know you're long Iren, Cypher, and Nebius, but what does this tell you about the state of data centers right now?
Look, I got to tell you something. So I streamed this morning, and I was supposed to stream at 3:50 a.m. my time, so 6:50 a.m. your time. And I changed my mind last minute. I was like, look, I'm just going to go on at 4:40 because like nothing's going to happen in the morning besides the earnings release, right? And then I wake up like 4:20. Which is 7:20 your time. And I was like, wow, I should have started earlier.
Yeah.
So I apologize for everyone who was on there. But, man, dude, you had Iren, almost a $10 billion deal from Microsoft, which we knew was coming, but we just didn't know who it was going to be. And we also didn't know how big the deal was going to be. But when you're building 3 gigawatts capacity in the next few years, like you're going to have a lot of demand there, right? So they announced that. And then they also announced a $5.5 billion deal. I think it was 5.5 with Dell, mostly for hardware. So Cypher, of course, reported earnings.
Sam, can you bring the mic a little bit closer to yourself?
Hold up.
Or just increase the gain a little bit.
This happens here we go. Fixed now.
Okay, perfect.
This happens every single time I come on here. I don't know, something to do with my Scarlet. But anyways, dude, so Cypher also reported earnings, which I've said people.
Now it just went back down.
What?
Honestly, you can blame StreamYard. It's not your mic. It's StreamYard.
Okay, I'm just gonna leave this window open. I'm gonna leave that window open. Okay, still good? Still good?
Yeah.
Okay, so Cypher released their earnings this morning, and it's not really important what the amount of money and revenue they get right now. What's more important are the deals that are going to come through the door. And I didn't know that they were going to announce a $5.5 billion deal with AWS. So this one is more of a leasing one. When you think of what people ask, what's the difference between Cypher, Iren, and Nebius? So we already know what Nebius is. Thank you for the Substack article. Can't recommend that one enough on Twitter. So Nebius is the whole stack, right? But they don't own every single one of their data centers from top to bottom. But the majority of the data centers, they own everything, right? But Nebius is very well diversified in terms of their other businesses. They got Toloka, Avride, Triple Ten. They got ClickHouse as well. And on top of that, they already have the $17.4 billion deal with Microsoft, and there's going to be more deals coming in with Nebius. They're really experienced at building out this infrastructure very quickly. Iren owns everything, and on top of that, they have the software stack on top of the infrastructure that they're building out. So the thing with Iren which was surprising for me, was that they never actually made the announcement of the major hyperscale they signed up with. They always alluded saying that, like, look, we have a hyperscale we signed, but they never actually said who it was. And today we found out what it was.
Right.
I don't know if they're trying to steal the spotlight from Cypher, but maybe it was the timing. They wanted to release the press release when Cypher was going to announce the AWS one. But they signed 2 deals. They signed a hardware deal with Dell, and they signed an infrastructure deal with Microsoft. Not necessarily using their cloud, because obviously Microsoft has their own cloud, Azure. And then that was it with Iren. Iren, I believe they reached a new all-time high pre-market, but we'll see what happens with that one. And that one, you're going to see more stuff coming through the pipeline. So Iren reports earnings on Thursday after close, and that's going to be an interesting one, because I'd imagine we probably would have heard this news ahead of time. We would have heard this news on Thursday, but I guess once they got hint that Cypher was announcing news at AWS, they just wanted to throw it out there.
So you knew there was an eventual hyperscaler they were going to partner with, and I think a lot of the Iren folks knew.
Yeah,
they just never disclosed it.
Yeah.
So let's get a little bit deeper into the mechanics of the deal. This Microsoft deal, are the unit economics making sense to you, or do you think the headline is good, but maybe the actual profitability from the deal is not the best, but it might not matter because it'll set the stage up for another deal soon?
So, well, we already knew that they were building 2 gigawatts plus in Sweetwater in Texas, and they already have 2 big data centers in Texas as well, the Horizon 1 and 2. And with this deal, basically you have Microsoft doing a 20% pre-abatement. I think probably the nuances with a lot of these deals is that these companies aren't just going to give them all the revenue up front. Microsoft is funding part of the build out as well. And I'm not sure if they would actually raise additional capital right now. If they do, they might raise additional capital in the future. But yeah, I mean, that's one of the controversies. Like, so what happens if these companies decide not to do deal anymore? Like, what if the demand for AI and infrastructure actually falls off a cliff? So can they leave these people dead in the ocean? And I think that's just an ongoing risk, right? But I'd assume, and this is an assumption because I haven't read all the mechanics of the deals yet with all the craziness that came out this morning, is that they have figured out a way to kind of protect themselves in case this does happen, or they've locked in like specific parts of the deal in phases, which other companies have done as well. Like with AWS and Cypher, they have it in 2 phases where they're going to be getting to 150 megawatts now, and they're going to be getting the other 150 later. And on top of that, Cypher did announce a new location where they're going to own 95% of the data center in Texas. I believe that was about a 1 gigawatt capacity. But yeah, I mean, that's just the risk with all this. Like, guys, what happens if none of the AI revenue pulls through or demand falls off the cliff and so on? That's going to be the ongoing bear case the whole way, right? In my opinion, I don't think that bear case is going to come to fruition.
Is the Iren and Cypher deal at all bearish Nebius or CoreWeave as they're going red right here? Could Microsoft have given $10 billion to Nebius, or is Microsoft saying we need to diversify our risk with these days?
There's only so much compute that one company can build at a degree of speed. Now, why is Nebius going red here? Well, where's the rest of the market right now? Okay, the market's kind of fading right now. So they didn't announce a deal, right? So you have a lot of these data center mining companies. By the way, Hut 8 actually reports tomorrow morning as well. I'm not long that company, but I'd imagine they're all going to get a lot of flavor. Oh, wow, look at Amcor right there. So
Amcor, me and Sam are both long Amcor. So.
Yeah, dude, Amcor is crazy. We could talk about that one like another time. But yeah, the money's flowing to what reported the good news. Cypher's up 25% right now. They just reported earnings, and they just came out the AWS news. And then Iren came out with the news with Microsoft and Dell. Like, that's where the money's going right now. So are people selling Nebius for these 2 companies? Maybe. I would assume that some people are, because maybe they're just caught up in the hype, or they see more alpha in another company and so on. Like for me, would I buy Iren here versus Nebius?
That was my next question.
Yeah.
Are you buying the data center plays like Iren and Cypher after this?
Yeah, I actually restarted the Cypher position this morning, and it kind of pulled back a little bit after that AWS news. But when I saw that news, I was like, because last night I knew I was going to nibble. I knew I was going to nibble on Cypher. And when I woke this morning, I was like, God damn it, I should have woke up earlier and just bought it in like the 18s or whatever, but I didn't. It's not even available in overnight markets to purchase. But would I buy Nebius here instead of Iren and Cypher? You know what, to be honest, I would probably buy Iren or Cypher over here instead of Nebius. But that's because I already have a 15% Nebius position. Like, I don't want to add to it, right? Like I'm someone who likes to be pretty diversified and kind of get the tailwind with the entire secular theme. Is Nebius going to go higher? Of course, Nebius is going to go higher as long as the theme continues. It's just that, look, this is where all the news is, and these are other companies that probably have a bit more runway in the near term when we talk about this entire move, right? So Nebius is already like a $40 billion company, and I'm still bullish Nebius. Nebius is 15% of my freaking portfolio. Like, this is not fun seeing these swings in my portfolio. But with me, it's like, well, this is the reason why I only have like 4 or 5% starting positions with a lot of these companies, because I kind of want like a taste of everything that I think will be the leaders in all these industries. And on top of that, I want to diversify my risk. So then that way, I don't know I doubt it's going to happen, but like, what if Nebius is down 20% and like the other stocks are like down like 5 or 10%? And that means that I'm not down as much. Now, do I think that's going to happen? Probably not. Okay. If Nebius is going back to sub $100, these other companies are going to go down as well too. Like that would have to mean there's some sort of catastrophic or macro effect, which we just saw a couple of weeks ago. We saw Nebius at $93. We saw Iren sub $50. We saw Cypher back down to $15, $16. Like, it's going to affect all of it. But today, yeah, you're seeing more of the alpha in Cypher and Iren because they just announced these deals and Nebius didn't. That's just how it is on a day-to-day basis. Like, I can't say where it is going to be on a day-to-day basis. But
it's a fair point. It's a very, very fair point. Sam, one more question for you. And guys,
Yeah,
Sam, there's his Twitter right there in the chat. Everyone can check it out and subscribe to him. He has a lot of good content on these data center plays on X, so please make sure to follow. Is it real to you? Is all of this real? Do the deals this morning substantiate Amazon $38 billion with OpenAI that this is real, and the people saying that all these hyperscaler AI data center plays are bubbles? Does it signal that it's just not a bubble if there's so much diversification of the deal flow we're seeing?
It's just a massive wall of worry, right? Like, people have been saying this for the last 2 years. Like, I remember seeing like those charts show up where it's like, hey, there's all this available compute for on all of these clouds for the advanced processing units and GPUs. Like, it's like you're going to keep seeing these bear cases come around because that is literally what a bull market is. It's not like if everyone was bullish, we would not be in a bull market because who else is going to buy? So you need these moments where you have the fear instilled, whatever, whether it's macro, micro, or anything, to get people to come off the line so that when the market goes up, it doesn't mean there's more buyers than sellers because there's always one seller for one buyer and one buyer for one seller. It just means that the buyers become more aggressive, where instead of buying it at the market, they're buying it, they're like taking the ass out, where they're buying it above what the asks are, where people are buying call options and all this stuff, where institution is like, look, we need to be more aggressive with this, with our buys, because we really want to get in now because we just thought it was going to be lower next time, right? So that is what pushes the market up. What does not push the market up is that there's more buyers and sellers. There's always a buyer for every seller. It is an even market, but it's when the buyers are more aggressive that pushes it higher.
I love it. Sam, thank you so much. We appreciate your content, and congrats. A fun morning for your portfolio.
Hey, thank you very much. Take care.
Later. All right, folks, we are going red across a variety of different names, but overall, we're holding on. Tesla, I don't know what got Tesla moving. All-time highs are 488. It is pushing 470 as we get into the market open right here, 467. I don't have a headline outside of Elon saying they're coming out with a flying car on the Rogan podcast on Halloween. But outside of that, Tesla making a move. I mean, maybe these data center energy plays are getting the street to bid up Tesla because of the energy demand that they're also going to have as well. There's a new chart I showed a little bit ago. Data center electricity demand worldwide is skyrocketing, and the dominant U.S. market is heavily reliant on natural gas. You got a lot of people calling for solar panels as the next big play. It's just the administration is not really friendly to those companies, but nonetheless, it does not seem like electricity consumption is going to be going away anytime soon. It's likely going to be accelerating with data centers. Yes, we do have the shareholder meeting as well in 3 days. I guess that could be a reason why Tesla's making a move. I do think Elon will get his compensation approved. I do think shareholders will vote for Tesla to be able to invest in XAI. And maybe that's why the stock is moving right here. S&P is basically flat. Look at those red candles. Got all the way to 685.70, came down to 682. So you are seeing the market sell off right here. Grab with a little recovery. SoFi with a nice recovery. SoFi was below 29. Now it's at 29.92. Did hit 30 at one point. Amazon still holding on to 5%. Amcor got an upgrade today to 62. That's why Amcor is up 11%. My price target was around 50, 62. I guess you're getting a little bit more of a premium or maybe higher growth estimates. This is from Althea Capital, and they're initiating coverage today. So it looks like they are expecting continued growth, and yeah, they're expecting sales to double. They're essentially expecting sales to double. And as a result, you're probably getting that sales multiple, which is trading at about 1.2 times to get closer to 2.5 times or potentially even 3 times. And that's getting you $62. S&P 500 right there, still green. Then SoFi trying to get to 30. Fiserv, is that one still dumping from last week? Fiserv, yeah, still down. It fell 50% last week, now down 2% on the day. That one's getting hit. AMD just went red. A little bit of a weird market. We had really strong momentum last week, obviously with Jensen and GTC. That kind of pumped up everything. Tesla, 470. There you go. Finally gets 470 again in what seems like almost a year, a little bit more than a year. And so last week, the market in general was getting a lot of momentum. And then you had big tech earnings, which was really good. Meta, unfortunately, was not able to continue to do well, even though I think they crushed it. But that stock got cut by 15%. And now I think you're seeing a little bit of digestion. This is kind of what Tom Lee was talking about in the morning as well, that the first 2 weeks of November might be rather choppy because we had a lot of gains over the past 2 weeks as we recovered from that 3% drawdown on October 10th. And that recovery might take some time to consolidate. Last time we had 470 was September 2024. Tesla's never reached $500 a share. It hit 488 at its highest. Wow, 471. December 2024, not September. December 2024 was the last time you saw Tesla at 470. Cypher, 30% move. Wow. Also, we did get ISM. We're going to get services at 10 a.m. I think we got manufacturing at 9:45. Did we? No, I think we got Canada's at 9:45. Canada came in at 49.6 versus 47.7. I think there was U.S. manufacturing at 9:45. I'll see if I can get those numbers, but it looks like we might have beaten on those numbers, and that's why the broader market is holding on. Google right there, that's up 0.48%. SoFi, 29.95. AMD goes flat, and the S&P holding green. S&P holding green. Fubo had earnings today. Fubo is down 8.6%. They announced the Disney merger completion yesterday, last week, which was good. I think they beat on earning. They beat on EPS by 33%. They beat on revenue by 4%. $368 million of revenue, negative 6 cents of EPS. I mean, look, I don't know a lot about Fubo. I do know there's a massive cult around this name. I don't necessarily know why, but people really have loved this name for a long time. I think the merger news with Disney was the big deal people were looking for. It's down 8% on earnings. I can't really tell you why. I guess it was up a lot, and the street didn't love the earnings as much as they thought they would. But this is a name that has been kind of stuck in that $1, $2 range. Then it made a move to $4. Now it's at $3.50. So you can't be too upset at its performance, but it looks like earnings were decent on the top and the bottom. So there you go. Fubo getting some love right there. Paturo, thanks for the super chat. As the demand for electricity increases, European energy companies are overlooked and still at low prices. Yeah, I mean, look, I am starting to do a lot more research on these energy companies. Some of them have already taken off. Obviously, the Oklos of the world, even without revenue, down 4% on the day, but still up 5x for the year, have done very well. Then you have Bloom Energy that had a really good earnings last week. That stock up 5.9% right now. I would imagine, there's got to be an energy ecosystem that a lot of people are looking at going into next year, as energy seems to be the issue. In fact, Nadella, that's what he said over the weekend. He said it's not a compute issue. It is a power issue more than anything.
Jensen, that while we can't see out 5, 6, 7 years, certainly over the course of the next 2 to 3 years, for the reasons we just discussed, that it's almost a non-existent chance that you have excess compute.
Well, I mean, I think the cycles of demand and supply in this particular case, you can't really predict, right? I mean, even the point is, what's the secular trend? The secular trend is what Sam said, which is at the end of the day, because quite frankly, the biggest issue we are now having is not a compute glut, but it's a power. And it's sort of the ability to get the builds done fast enough close to power. So if you can't do that, you may actually have a bunch of chips sitting in inventory that I can't plug in. In fact, that is my problem today, right? It's not a supply issue of chips. It's actually the fact that I don't have warm shells to plug into. And so how some supply chain constraints emerge, tough to predict, because the demand is just going, is tough to predict, right? I mean, I wouldn't, it's not like Sam and I would want to be sitting here saying, oh my God, we are less short on compute. It's because we just were not that good at being able to project out what the demand would really look like. So
it looks like power is the sole reason, in the words of Nadella, for some of the issues that we're having right here. And that's why you're seeing stocks like Bloom Energy also get a bit of a move, 6%. Now, some people were saying this is bearish Nvidia because he's saying compute is not the issue, it's power. I don't think that's the case. I think that at some point over the life cycle of this entire build out, you're going to need a lot more power. And, Nvidia already highlighted their $500 billion opportunity over the next 5 quarters. You look at the analyst estimates, they continue to go higher. So it's just a question of getting those GPUs to be operational, because now I think the biggest bear case to Nvidia is not even about supply, demand, compute constraints, none of that stuff. Is there an ROI? Because the only way these hyperscalers continue to buy, even if they're not buying at the level they were buying at in 2023, is that they have demand from their customers because they're seeing an ROI on AI services and AI workloads. And that's how NVIDIA gets to sell you the next generation of their chip. So in order to get that ROI, you need the data centers to be functioning. And in order for it to be functioning, you need power, which is what I think Nadella is talking about even more. Tesla right there, 472. Let me check resistance for 473. I guess it's running based on the shareholder meeting. I don't see any other headline. I know Elon talked a lot over the weekend. He was on a couple different podcasts, but it looks like that shareholder meeting is getting the street excited. 473 has 14,000 shares, folks. That's nothing for a company like Tesla that does 83 million shares of volume. I mean, that's nothing. I wouldn't say Tesla's in full price discovery mode yet, but it hasn't hit these levels in over a year. So you would imagine there's some level of price discovery going on for Tessie. Next Era, is that green? That one's slightly red on the day, but that one's definitely going to be a big player. When we think about energy, AMD just went flat. That's down at 254. SoFi got a recovery to 30. Nice to see that on SoFi. Grab trying to get back to 6. Grab will have earnings today after the bell or at 7 p.m., so we'll cover it then. Amazon right there, 255, losing a little bit of momentum from that AWS deal, but still a 5% move. That's pushing it basically to all-time highs. Yeah, all-time highs. Amazon, $3 below all-time highs. And then Meta holding 1.2. Why do you think they're selling off Nebius and CoreWeave? I mean, again, you could chalk it up to what Sam said, which is that the market's kind of selling off a little bit, sure. But obviously, Iren and Cypher are not selling off. Iren up 20%, Cypher up 30%. It's almost like you got people selling Nebius and CoreWeave to get into Iren and Cypher. I feel like that's the, I don't know, there's not that many ways to explain it. I don't think these deals are bearish Nebius or CoreWeave at all. But nonetheless, people are taking some profits right here. Is the VIX up today? The VIX should be going up right now. VIX is up 2.4. Look, I think all of us should really expect the next 2 weeks of November to be choppy. And the reason for that is because, when you hit all-time highs, you got to consolidate. And at some point, maybe that consolidate's happening in November. Having said that, I don't think we have to chop, because if we continue getting deals like the deals that we got today, maybe that allows the bull market to just continue being a bull market and being a bull market that is in a seasonal tailwind, aka the month of November. On average, the S&P 500 is up about 1% in November. So if we do have a typical November, that 1% would put us near that 7,000 range. But that 7,000 range might happen towards the end of November, not early, which means the first 2 months, we got to consolidate a little bit of the gains. Also, we don't have NVIDIA earnings until the second half of November, which is probably what the market's really waiting for after big tech. And so that's going to be important to see as we as we get into the month. Wow, Tessie hit 474. Dude. I mean, if anyone has a reason, let me know in the chat. I don't see the headline. I think we're all just sitting back and enjoying it. I feel like it wants to get back to all-time highs, 488. I feel like it wants to get back to all-time highs, maybe towards the end of the year, and maybe that shareholder meeting is going to be the catalyst. By the way, we have U.S. manufacturing PMI. Let's go right here, and then we'll get into services that we're getting in right now.
The final read improves to 52.5. That would be the best since August, and August was the high watermark at 53. The only reading that we had this year in this series under 50 was in July, and then, as I said, August came with the best reading of the year, so we continue to be in expansion territory. We still have more PMIs to come out of time.
All right, so that manufacturing PMI was good. This is services PMI that just came out.
The headline manufacturing expecting a number close but below 50, 49 and change, ends up coming in light, 48.7. That equals where we were in August to find a lower number. You're going to July. We haven't had a positive number there since the first couple months of the year, January and February, meaning over 50. If you look at prices paid, this is good news. It comes in light, but light in this instance is a positive. 58.0, that follows 61.9. 58.0 would be the second lowest of the year outside of January when it was 54.9. On the new orders front, 49.4, sequentially higher than 48.9. 49.4 would be the strongest number going back to, well, just August when we were over 50. This would represent 1, 2, 3, 4, 5, 6 readings below 50, so it's a real mixed bag on new orders. And finally, on the employment front, we would have had the jobs numbers, of course, but yet we're not getting them because of the government closure.
Okay, so ISM manufacturing, not horrible. Regular global manufacturing, better than ISM. This one was a miss, that one was a beat, but these numbers, again, really need jobs data to quantify them, and right now you don't have that jobs data. Folks, Amcor is really making a move right here. 37.09. It just hit just below 37. Obviously, it's because of the upgrade they got to 62 today, but you got the street that's starting to buy it up based on that upgrade. And they don't have a $10 billion Microsoft deal, but attractive valuation is getting more people excited. Some of the parts base price target is 62 from Athena. And they're talking about the stuff that we've been talking about for the past couple of weeks, which is their Arizona packaging facility, their ability to grow sales 250% over the next couple of years. And then they're only putting an 18 times multiple on 2027. That's not super expensive. 18 times, I mean, like, that's relatively reasonable for a company. Now, if their margins were better, it'd be better than 18 times, but at 18 times, that's not, you're not overstretching the multiple to try to get a price target, is my point. And at 36 times, it's obviously well below 18. At $36, it's well below 18 times. So not too bad. S&P 500 right there is about to go red. It's about 27 cents away from going red. You guys are saying the Tesla-Samsung deal, that was announced a while ago. I mean, Elon reaffirmed it on the earnings call. I don't think there's some massive update to that could be causing the stock to make a move. I see some headlines about it, but again, or is this a new one? Is this a new one? Tesla inked a $2.1 billion deal with Samsung SDI for energy storage batteries, not for cars, but for grids. Okay, this hasn't been confirmed. This is a rumor. Korea Economic Daily and Reuters. That's the source. Korea Economic Daily and Reuters is the source for a $2.1 billion deal for energy. I guess that's your best headline. That to me is more of a reason for the stock to move than the shareholder meeting. While Samsung says nothing's decided, Korea's battery rumor mill doesn't leak without smoke. The ESS units, energy storage systems, are the backbones of Tesla's Megapack business. The move locks in a crucial non-Chinese supply chain for a reason. Okay, there you go. Seems like the Koreans put out a rumor, and that rumor might be accurate, which is why Tesla is getting a move right here. So I guess it was energy. That's what we speculated a couple minutes ago, right? That it was something around energy, and there you go. It looks like it's energy. Google goes red. SoFi still green. AMD red. Amazon 4%. Tesla European sales fall 59.4% in the month of October. Again, it looks like the street doesn't care too much about the lack of Tesla selling cars in Europe. But yes, those European sales continue to decline. 59.4% in the month of October. Street is obviously looking past that as they're more focused on energy. Bitcoin 107, Ethereum 3,700. SPY just went red. SPY just went red. Interesting price action today. Very interesting. I mean, take a look at the majority of the market. Outside of Nvidia and Microsoft and then Amazon and Tesla, everything's red. Everything's red. Healthcare, manufacturing, utilities, consumer defensives, durables, retail. I mean, Walmart and Costco are down a little bit, but they're still down. Feds Goolsby says not much change since September meeting. Feds Goolsby, I'm uneasy with front-loading rate cuts. All right, Goolsby needs to chill the hell out because we need more of these damn rate cuts. All these Fed officials that are saying, oh, I don't know if we need a rate cut. Shut up. We need a rate cut. You know we need a rate cut. You see all these layoffs? We need these freaking rate cuts. Acting like we don't need a rate cut. They're all trying to act like nonchalant about it, that we don't need a rate cut. It's like, no, dude. We need these damn rates to be cut. In fact, the markets probably wouldn't be as worried about pricing in a rate cut. Look at that, 68.5% for December. It was at 90% before Jay Powell on the Fed meeting last week talked about how December is not guaranteed, which we all know we all know nothing's guaranteed, but the way he said it was to make people really think deeply about it. And so now you got people speculating we might not get a December cut. Which, to be honest, if we don't get a December cut, it's almost going to happen exactly like it happened back in December of 24, where we got the cut, but it was a really hawkish cut. And, you know, the markets could have ended a lot higher, but you had that headwind towards them. If we actually don't get a cut, I can't even imagine how 2025 would end out. So I would hope that we definitely end up getting that cut. Yeah, it was at peak 98% at one point for December probabilities. I don't know why they can't say we will look at data and decide rather than giving this BS. Yeah, I mean, like Jay Powell it seems like he came out with an agenda of wanting to be hawkish about it, which is what spooked out. It's definitely spooked out the bond market. Where is the 10-year? Are we still at 4.1? Yeah, 4.1. Look at that. 10-year spiking up. How about gold? Gold was below 4,000 yesterday. Gold back above 4,000. Gold is really acting like a champ. Unfortunately, if you bought at 4,400, you are bag holding, but above 4,000 is not horrible for the price of gold, at least at these levels. And then in the stock draft, folks, we are officially back in first place. Matt's at 42. I'm at 45. Palantir is helping. Hood is helping. AMD is helping. Nebius is helping. Apple as well is doing well. We'll see today after hours if Grab can continue to help. Tesla, we got that in the portfolio as well. Steve's at 9%. Tanner's at 27, 26.9. And then Chris is at 11.2. Matt's at 42.3. The Mats went down because ASTS for some reason is taking a big hit. ASTS right there down 5% on the day. But that also was up a lot over the past couple of weeks. It was at 36 in September. Sound says one could argue we are more deflationary than inflationary right now. I agree. I mean, one could definitely argue that. And given what we're seeing in the labor market, you know, it's not crazy to imagine that as we get more layoffs, that will lead to, guess what, more deflation, because people will not have as much money to spend because they won't have as much income. I shared this chart last night, and, you know, it's one of those charts that when you look at, it's definitely something to think about. These are a lot of consumer brands, including Lululemon, Procter & Gamble, a bunch of different names that are down a lot year to date. And this chart right here is signaling the bifurcation of the economy, which is that lower end consumers are not doing that well, which is why they're not able to shop at brands that theoretically shouldn't be as expensive for their products. Chipotle, obviously last week, that was pretty bad. But you are seeing big tech continue to do well. Chipotle getting a little bit of love right here. So I think it's something we have to pay attention to. And that also could create a lot more deflation in the economy, as you have different parts of the economy that are just like different parts of consumers that are not buying as much as before. I mean, if people are having a hard time paying for Chipotle and you're telling me we're not going to cut rates, I just don't believe that. I really don't believe that. Nebius right here. Wow, they're taking her down 5%. They're taking her down. At the same time, they're leaving Iren up at 72, and they're taking CoreWeave down at 3%. What do you think about flying cars by end of year? So Elon said there will be a presentation on their new flying car by the end of year. I mean, what do you guys think? Do you think we're actually going to get a presentation? Not the release of the car, but just like the press conference where they show it off. Elon said it will be the greatest product demo in the history of products. And he said by end of year, there is a chance that they show it off. So you would have to say by mid-December, maybe at the shareholder meeting. Who knows? Like, I don't know. I mean, it would really be really nice to see a demo. S&P, by the way, just flipped green. But it would be quite incredible if we could even actually get the presentation of it, because I would imagine that if a presentation means they have to have a prototype ready to go, even if they can't sell it yet. And again, you know, he's saying it's a flying car. Like, what does that mean, right? Like, I don't know. Then are we really getting into the Jetson era? Because if we are, hopefully you need some GPUs to fulfill the dream, and that'll help the overall sector. But it would be quite crazy if that happens. What is Iren's market cap? Even after this deal today, Iren's trading at 20 billion. They just got a $10 billion deal and they're trading at 20 billion. I know the 10 billion is not profit. I understand that. But I mean, you can definitely get some people. I mean, there's a reason people are buying Iren and not Nebius today. They're looking at the market cap versus the deal flow. And they're seeing probably something that looks way more attractive than a Nebius, although I don't think Nebius deserves to get hit right here. MP gets crushed. Oh, we didn't even look at rare earths. Wow. Okay, so the rare earth stocks we've been talking about for the past couple of weeks now, after their tremendous run, yeah, all of them are down on the day. The reason they're down is because Trump said over the weekend that China's not going to be that aggressive anymore with the rare earth export controls, which means if China's going to continue to manufacture and export rare earths across the world, especially to the United States, you might not have as much demand for a USAR or a CRML or a TMQ or an MP. And that's why those guys are getting hit. Yeah, they quite literally got rugged by Trump. I'm not going to lie. I mean, these stocks pumped to the moon when Trump started the China beef on October 10th, because, you know, if you need rare earths from someone and China's not giving it, you're going to have to go to domestic producers. But now if China's like, just kidding, then yeah, those names are going to get sold off. Where's BMNR? BMNR 43.95. You know what's happening, folks? What's happening is the street is starting to doubt Tom Lee. They're starting to contract the multiple. Ethereum's relatively flat, and it has been flat. I mean, basically, it was at 3,700 last week, and Bitcoin was at what, 47? So it's not like Ethereum has made that big of a move to it's not like Ethereum's at like 3,000 or something. At this moment, you have to ask yourself, how much do you believe in the thesis? And I think from Tom's perspective, he, quite frankly, I mean, I've heard him on multiple podcasts say he doesn't care if Ethereum is lower. Obviously, you know, he probably wants it to go higher for BMNR to be higher and for people to be happy, but he does really believe that this is going to be one of the best macro trades. And so getting to acquire cheaper Ethereum as the MNAV expands over time will make this Ethereum really cheap, but you've got to buy it in these days and kind of hold on to the thesis if you think that Ethereum will make that move. Bitcoin and Ethereum, though, starting off November in a pretty crappy situation. November tends to be good for Bitcoin historically, just like October is. And so far, starting off down below 110 than Ethereum at 3,700. I mean, is this a good entry point for BMNR? Look, I mean, this reminds me of September when I was buying. I was buying heavily at these levels. My average is 46, so now it is below my average. My cover, I was calculating my covered cost premium versus the average on Bitmine, and it's closer to like 33, 34. So my adjusted cost basis is around that $34 range, and my actual average is 46. Is this a good entry? I feel like if you think Ethereum is close to bottoming, then yes. If you think Ethereum has way lower to go, then no, because Bitmine will go well below 40 if Ethereum goes back into that 32, 3,300 range. But you have to ask yourself how that's playing out. Doug says Bitcoin is above 100K. This is not how you define crappy. Well, Doug, Bitcoin's been above 100K for a year. In fact, around this time last year is when it first broke above 100K. And a year later, it's only at 107. So I'm just saying it's not really been the best risk to reward all year. But obviously, it is good that it's above 100,000. By the way, our boy MicroStrategy, or our boy Sailor, continues to buy Bitcoin. 397 at 114,000, 45.6 million. They now have 641,000 Bitcoin. Doug says it's never been this stable. Yeah, you're right. I mean, obviously I'm trolling a little bit. Look, Bitcoin above 100,000 is amazing. And the fact that it's holding above 100,000 is incredible, especially for an asset that people thought, including myself a couple years ago, would never get to 100,000. I mean, I'm on record saying, dude, I don't think this is ever getting to 100,000. I was wrong. It got there. And the way I played it was hood when I started to realize that, you know, Bitcoin was going to do very well. But if you're a MicroStrategy shareholder, you're probably pissed off this year. I mean, there's no doubt about it. And I don't think you can be pissed off at Sailor. It's more so pissed off at Bitcoin price action, which at the end of the day, you know, Sailor can't really control outside of buying it. MicroStrategy down 11% for the year. And then you got a lot of crypto derivatives plays that are. Where's ASST? Where's that Bitcoin treasury everyone was buying? 134. Okay, so that's up today. That's up 1.03%. Coinbase and MicroStrategy are down. 1 year ago was 68,000. Yeah, look, Bitcoin is the best performing asset in the history of assets. And on a 4-year basis, it always outperforms anything else. Real estate, gold, the stock market, etc. So this might be one of those years where it just doesn't meaningfully contribute to that 4-year cycle. But overall, you know, it's done very well over the past year. If it's not Iren, I don't want to hear about it. Dude, you Iren bulls, today is your day. I just remember the first tweet I saw when I woke up this morning was this contract. And at that moment, I was like, oh, this is going to be a good day for the Iren bulls. Today is their day. Just like when I saw that OpenAI AMD deal, which is so cool about this bull market. It's like every other week, you're seeing one sector of the stack really get some momentum. And it benefits a ton of different shareholders that are you know, holding on and believing to that story. Wow, ETH below 3,700, folks. 36.98. 36.98 on Ethereum. 36.98. So overall, I mean, you're getting a red day. It's just that red day is being saved by a couple names if you own those names in your portfolio. But overall, we are red. S&P goes back to red. Nvidia and Palantir are still holding 200, which is quite incredible. Nvidia at 208, Palantir at 203. So obviously the street's getting excited for those earnings. And then SoFi just recovering. AMD down 0.5%. S&P still up or still down. Amazon 4.8. And then Palantir right there, 203.47 on the days. Amcor still holding 36. Amcor 36.72. Up 14%. What about D-Wave? D-Wave, wow, that's down 9% today. IONQ is down 7%. Rigetti is down 10%. Okay, so the quantum names are getting hit today. Oklo down 6%. This is the lowest Oklo has been in how long? In 3 months. Sorry, 2.5 months. So Oklo's getting back to the September 20th levels. Quantum's down about 9 to 10%. Rare earths are down 7 to 8%. And then the S&P is red. Nike's getting hit. Nike, yeah, wow. Nike's well below where it was before earnings. 62.84. It's a weird day. So Nebbies and CoreWeave get hit because people are jealous of Iren and Cypher. The quantum stock's getting hit. I don't know why, but they're getting hit. Oklo's getting hit, although you have a ton of bullish stuff about energy today. And then some of the hyperscalers are red outside of Amazon, which got the AWS OpenAI partnership today. That's keeping it green. Oh, Cure, that biotech. This is why getting into biotechs is tough. It's down 57%. It pumped like 200% a couple weeks ago because they had some positive trials. And then today, they announced not positive trials. Well, it wasn't just positive trials. It was FDA. So the stock ripped on clinical data in Huntington's disease on September 24th, up 260%. Today, down 67 after the FDA says it does not agree with the pivotal data compared to the external controls they put out on September 24th. And the data is inadequate for submission in order to legalize this as a real drug. the world of biotechs. It's the world of... Doesn't Skrelly like this one? Does Skrelly like Cure? I feel like he likes this one. And look, the FDA doesn't agree with it right now, but maybe the FDA agrees with it in a year and the stock, comes back. So, or maybe in a couple months, who knows? So the FDA saying they don't love it is not the end all be all, in my opinion. They have to work to make the FDA, or work to essentially get the data to be inside of the controls the FDA cares about. That just might take time. And that's why the stock is down 58%. Rocket Lab getting hit as well. Rocket Lab, wow, below 60. Okay, so we're starting off November with some consolidation of the October gains. It looks like that's happening. Skrelly said today he is now full port quantum short. Is that true? Is he actually full port quantum short? Because he's gone in and out of these shorts like a million times this year. But if he's officially going full port short, then it likely would be his biggest short entry, I would imagine. Coinbase right there at 335. Yes. Okay. I don't know what full port means. I don't know if that's a trading account. I don't know if it's his actual capital. I don't know if he's managing someone's money, but I guess he is full on shorting these quantum names. UNH is going down, I think, because of this government shutdown stuff. We're not getting a lot of clarity on that. Wow, 329. We were at 338 10 minutes ago. Goodness gracious, bro. The fact that Palantir and Nvidia are holding their green, I mean, it's almost like you're waiting for them to go red if everything else is going red. SoFi holding the high 29s. Grab's down 2%. They've got earnings coming up. That's Algo's taking it down with the rest of the market. Reddit was up 15% now, or it was up 7%. Now it's down 3%. Amazon probably would be red if this OpenAI thing wasn't announced today. Hoodie was pushing 150. Now, Hoodie can only withstand the crypto decline for so long. If Bitcoin and Ethereum are going to keep getting hit, eventually it's probably going to take Hood down with it. That's why Hood's getting hit. Ethereum 3690, which means BMNR probably low 43s, 43.59. Mongo's down 10%. Dude, these guys were up 10%. Okay, they're down 10% from the highs. They're still green, but they were at 384. Now they're at 360. It's almost like the street decided they don't like the new CEO anymore. I guess that's how we're starting out November. That's how we are starting out November. Let's see if we have a couple other headlines right here and get some coverage on this ISM data, but nonetheless, relatively red for the day.
I mean, look, the rise last week was clearly on the hawkish statement, or at least the non-commitment by Fed Chair Powell on the December rate cut. He clearly wants optionality there. So we saw back up in yields up to above 4.1. That's where we are right now. We're a little bit lower than that. I think the data that Rick just reported on weaker manufacturing comes a little bit as a surprise, because the regional Fed manufacturing index they've actually pointed to a little bit of a tick up lately. So we were looking for some better manufacturing numbers. So maybe that's why we're seeing yields come off the highs right now. But, back up to 4.1 is just the uncertainty over what the Fed is going to do, I think, in December, and whether they're going to have enough data to determine what they can do. Remember, the whole reason they're cutting interest rates is because of the weakness in the job market, and it's really hard to tell what's going on there right now.
Although you could guess after 34 days of shutdown, probably not adding to activity. By the way, dollar 3-month high, awfully close to 100 on the Dixie. Best performing G10 in the second half of the year.
So which tells you that there's so much more to the dollar than just questions about credibility of U.S. assets. If that's really what it was about, then I don't think the dollar would like that we're having a record-setting government shutdown. The fact is that it had a 10% sell-off on the year into this most recent period, and now there's a bit of a bounce back. That and the U.S. economy, overall resilience, especially looking at some of the other countries. I mean, I was just in Riyadh, and at this big financial conference, and always there's always conversations and sentiment. U.S. is exciting right now. Middle East is exciting right now. Europe is not exciting right now. Remember back in Davos a few months ago, people were saying, oh, maybe Europe is bottom. They're finally moving toward deregulation. They're finally going to become more competitive. No, where are they on AI? I mean, the massive spending and the deals that you're getting from some of these Middle Eastern countries like Kingdom of Saudi Arabia, UAE with the U.S. You're not seeing it in maybe a little bit in the U.K. President Trump was there and they got some deals, but not in Europe. And Europe is still a place where, and I know there's been outperformance in the equity market right now, but the feeling that I got there is that, you know, people were not bullish about the prospects there in the long term.
Yeah, certainly the engines of growth have switched from Germany and France to maybe, I don't know, Greece and Spain. Europe's going through a lot, it's true.
Which are smaller.
Yeah. Meantime, the major averages are coming off another winning month and entering a seasonally strong period going into year end. Joining us this morning with his outlook is
All right, so you got some of the consolidation, I guess, from October kind of taking place. S&P 681 as we continue to go red. Fermi, that was an IPO in the data center space a couple of months ago. That stock, I mean, it's been relatively flat since IPO, but up 7% today as it's catching a bid. Tesla lost some steam. It was pushing 475, back down to 467. But at least it's still up 2%. Then you got Nvidia still holding 2.5%. AMD just got sued. Is this like a real lawsuit or is this just another class action lawsuit? Technology licensing company Adia filed 2 lawsuits against AMD in Texas on Monday for allegedly infringing 10 patents related to semiconductor innovations. Is this a big company, technology licensing Adia? Are they even public? Adia stock. Yeah, they are. This is a $2 billion company, bro. They're suing Lisa Su? Huh. Is that actually why AMD? I can't believe that's why AMD's red, dude. They're suing a $400 billion company for semiconductor manufacturing patents. I don't know if their team's going to be good enough to beat Lisa. But Lisa is indeed getting sued. There you go. BM&R getting wrecked, 8% down, 43 to 42.60. Ethereum getting wrecked. Okay, so someone's obviously selling a crap ton of Ethereum right now. Same with Bitcoin. Bitcoin did, oh my goodness, 106. Wow. That's a quick candle too. It was at 107.4 at 10:20. That's $1,000 candle in 8 minutes, as you can see right there. And then obviously Ethereum's following suit. Okay, so crypto and Ethereum down the gutter. BM&R MicroStrategy down the gutter. Nebius down 6%, because I guess people are mad about Iren getting this deal. Iren just lost 70. Iren was up 20. Now it's up 13. Cypher was up 30. Cypher is now up 22. All right, you're seeing the entire market get a contraction. By the way, the VIX is up 7%. There you go. There you go. No one's safe. Palantir very close to going red. Nvidia still has a decent margin of safety, up $5. S&P potentially below 680. It's very close to that. 10:30 slam, right on time. Speaker Mike Johnson said we must recalculate partial payments to SNAP recipients. We had a discussion with President Trump over the weekend regarding SNAP. There are legal impediments to SNAP funds. SNAP has to deal with food stamps in the United States. So, right now you have a big legal challenge over people getting the money that they need to literally eat food. Which, by the way, the reason why Trump doesn't want to disperse these SNAP benefits is because he knows that's going to force the Democrats to come to the table to have a discussion, because if people can't eat food, I mean, you're not going to have an American public that's necessarily going to be happy. They can deal with a lot of shit, but if people are hungry, that doesn't work out. But then the federal courts on Friday stopped that from happening, and they forced the administration to use emergency funds to fund the SNAP benefits, because it is in this country illegal to not be able to give out those food stamps. So you've got a lot of back and forth with what's going on with the shutdown. Meta right there, 647, back below 650. Wow, Bitcoin 105. What whale is liquidating their crypto? Is this how we're really starting out November, dude? Is this how we're starting out November? Crypto going in the gutter. Ethereum right there, not too far away from 3,500. Archer and Joby are getting hit as well. Archer, yeah, wow, 9% on Archer. Joby had an Nvidia partnership announced last week. Joby still down 9%. Okay, so pretty much everything is red. What's green? Nvidia, Tesla, and Palantir, Google, Amazon, Microsoft, CrowdStrike, and Uber. Lilly and Dell. So you have a select few names that are green. Lyft is green. Iren is still green, but a lot of them losing the levels they were at before. Fear and greed. I would bet we're at fear. No, we're at neutral. We're at neutral. That means we need some more pain. This is kind of weird. I don't know how we were at all-time highs last week, but we were at fear, and now we're below that. We're at neutral. But this is the nature of how the index kind of consolidates and moves with the market. So you might need a little bit of a more decline to see fear come in place. And again, I mean, the S&P 500 is still well above where we were on the October lows at 647, right? So we're at 680. I mean, I know we're not at 7,000 yet, but we are well above the lows of October. So one could argue this isn't enough to be in fear. Amcor, are we losing some momentum there? Yeah, we were at 37. We're at 36. Would not surprise me if this one gets sold off as the rest of the market's getting sold off. But you have some of these names holding some green. Google right there, 282, Grab getting hit before earnings, down 1.75%. And then Meta, 646. Amazon, Apple, Nvidia, all up in green is good. The heavy hitters are green, so we can move into greed. Yeah, no, I would agree. The heavy hitters are still holding on to a lot of their momentum. Apple right there, 268 on the day. Where's Celsius? Celsius is down 4%. Crypto winter is starting. Dude, if we legit have a crypto winter, which is a crypto winter, correct me if I'm wrong, but it's like a couple years, right? Like in the cycle, it's a couple years. Or is it one out of, like 2026 is that year where it's supposed to happen, just like 2022, 2018. I think it's supposed to be for like 9 to 15 months. Two-ish years, right? Okay, so about 2 years. If we actually have a crypto winter for 2 years, I mean, that's not good for Hood. That's not good for Coinbase. That's not good for just general retail momentum. That's obviously not good for Bitcoin, Ethereum. Ethereum now 35.84. Definitely not going to be good for BM&R. Not going to be good for Kraken or any of the private crypto companies. I still think it's hard to imagine we get a full-on crypto winter given the amount of regulatory frameworks that are in place for crypto to do well, and given the administration themselves own a ton of crypto, a lot of people that are partners with the administration. So there's a natural incentive to make sure crypto does well, along with the fact that you're just seeing a lot more use cases out of these products that are very real, like stablecoins, tokenization, et cetera. So, I mean, if it happens, it happens, but it's hard to believe it would be like a 50% retracement on all these names. But then again, crypto's crypto. Who knows? Maybe that could happen. Bitcoin right here still down at 105.9. You're getting a little bit of a bounce right there. 105.7 potentially was the bottom. Very, very small move up, but we're gonna see if it stays there. I mean, look, at the end of the day, you will have a decent amount of people coming in to get excited to buy this dip if it does happen, or if it does get more aggressive. But right now, it is there. Here was the Transportation Secretary, Sean Duffy, talking about this government shutdown. Let's get clarity from him on when this is going to be resolved.
Week, and that's going to be zero. And the clear point from the controllers that I've spoke with said, listen, a lot of them can deal with missing one paycheck, but a lot can't. But many of them can. None of them can miss 2 paychecks. They all start, their home finances fall apart. And they're all going to have to look at taking second jobs or quitting and getting into another line of work. And the consequence of that is very real for our air system. We are 2,000 to 3,000 air traffic controllers short. I'm trying to put more air traffic controllers.
Guys, this is actually scary, especially for those that are traveling. Air traffic control. I think this is one of the most underappreciated jobs in this country. These are people that are literally talking to the pilots when they're landing in air and taking off to make sure that you are safe on a flight. These people not getting paid, to me, is a national emergency, especially during the holiday season when people are traveling. And if we don't get the shutdown resolved, and you don't have people that have an incentive to come to work, or you're just, they're feeling like shit because they're not getting paid, they might not be in the best attitude when it comes to making sure that people on an airplane are safe. And you can't blame them if they can't pay their mortgage. They're probably not, they're human at the end of the day. That stuff is very serious. Very, very serious.
Into the system. And what this is doing is making it more challenging and actually taking controllers out of the system. So I think this has long-term impacts beyond when Democrats decide when, their little temper tantrum is over and they decide to open up the government.
This is leverage. I'm just wondering how.
Right, they're willing to hurt air travelers, whether they're going to a funeral, they're going to see family members. Pretty soon we're going to have kids coming home from college for Thanksgiving break. They're willing to endanger poor people who can't get food stamps. They're willing to risk subsidies in regard to health insurance. They don't care who they hurt. They care about power. By the way, we had an election a little less than a year ago, and Donald Trump crushed it. He won the popular vote. He won the 7 swing states. Democrats lost. And so if you want to pass legislation, you can introduce it, you can debate it, but government shutdowns trying to garner leverage is not the way that you do it. Debate it, vote on it, and then come back and try to win elections. But they lost. Donald Trump won. And
dude, I'm not gonna lie. I would be scared to travel. I don't want to be overly hyperbolic here, but whenever I think of this situation, I always think of that Breaking Bad episode. Does anyone remember the episode where the guy who's an air traffic controller, he gets some really bad news about his daughter. He goes into work the next day and he just doesn't do a good job. And then you have a flight that crashes because they didn't get the right information. And that has always stuck with me for a long time because I think I've been on well over 1,000 flights in my life. So, whenever you take off and land, I'm always very grateful that everything is okay. And so it's like, when you think of that stuff, and then you got the Secretary of Transportation, Sean Duffy, talking about it's the Democrats' fault, yada, yada. I'm like, bro, forget this. Democrats, Republicans, these are people that are on an airplane that need to go see their family. Don't give me this whole blaming the Democrats nonsense. I don't want to hear this shit. As an American, I don't care anymore. Just figure this shit out. Get a resolution. When you're talking about people's lives, we're talking about people having the ability to eat food. The political stuff just becomes stupid at this point. Meta right there, up 0.23%. Meta getting a little bit of a bounce, and then Amazon 255. That's also still getting a bounce. I think we're bouncing across the. Wow, Tesla back to 470. S&P almost green at 681. Did we just get our bottom? Bitcoin 106 from 105.4, and then Ethereum 3620 from 3580. Maybe we got our bounce. Maybe we got a little bit of a bounce. But yeah, the shutdown has to end, bro. The shutdown has to end. I mean, it's getting stupid at this point. People not being able to eat food, and then people potentially getting on a flight and not knowing if their air traffic control is going to be accurate enough to allow them to fly. That shit is crazy, especially during holiday season. Especially during holiday season. Iren right there, 12%. Now, this could be a dead cat bounce, folks. VIX just came down. It was up 7. Now it's up 6. So the VIX is down 1%. You got algos obviously buying stocks once the VIX goes down. Rocket Lab back to 60, fell to 59.15. Pretty much everything's getting a V. Robinhood was at 142. Now it's at 144. Tesla reclaiming 471 is a really big deal. It hasn't hit 470 for since December last year. And then where's BM&R? Are we back at 44, 43.36? So BM&R bouncing from 42.40 to 43.40. It's a very small V, but maybe it's enough of a V to hold on. AMD went green, even after a $2 billion company decided to sue them for their patents. Quantum also getting a bounce. D-Wave was at 32. Now it's at 33.50. So this is a why Oklo probably, if everything's bouncing, then this is the entire market. Oklo's getting a bounce as well, 121 to 124. This is what I love about the market. When everything moves, either up or down, but everything moves together. No matter what the company is, what the stock, what their fundamentals are. If it's a algorithmic move, you will know because everything will go down and everything will go up at the same time. But it seems like you're getting a very small bounce right here. Tesla's all-time high is 488. 488 for Tesla. So it has a little bit of a way to go. We're not going to have Technical Tuesday tomorrow. Tomorrow's AMD and SMCI, and I think you guys will actually kill me if I don't listen to AMD's call. So yeah, we are not going to do Technical Tuesday. Also, we still have a lot of earnings, so Jason can't really do that much TA until these earnings results come in. But we will be back next Tuesday after tomorrow. So we'll be listening to AMD. Yeah, there you go. Comma Heartbreak says we will kill you. See, I know. Like I experienced it 6 months ago. It was AMD earnings. We looked at the results. The stock was flat. I was like, all right, guys, let's talk about some headlines. And everyone was like, what do you mean headlines? You think there's a more important headline than AMD earnings? I was like, guys, well, we just looked at the results. It's like, no, but there's a call. I was like, why do we care about the call? And they're like, why do we care about the call? Did you just say, why do we care about listening to Lisa Su? And then your boy turned on the call and listened to it for an hour. So I learned my lesson. Baba, are we red on Baba? Yeah, down 2.3 on Baba. Yes, Grab does have earnings today. I don't know if I will be live for Grab earnings. I will try, but it's going to be a little tough with the timing. But regardless, we will talk about it tomorrow. So I will go through all the numbers tonight and we'll talk about it. Look, a simple preview here. I think the quarter is going to be phenomenal. Will the stock move? I have no idea. Do I think the stock should move on a really good quarter? It depends on if they beat and raise by a substantial margin. However, they report at 7:30. The market closes at 8 p.m. There's 30 minutes for the stock to go higher or lower. So, I mean, at the end of the day, like I just don't expect a massive move, even if we get a good earnings until Tuesday. And maybe on Tuesday, we don't get a massive move up or down either. Maybe it's flat, but I would say you have to wait 24 hours because they're not reporting at 4 p.m. where you have multiple hours for the street to digest it. They have 30 minutes. And a lot of brokerages don't even know when Grab's reporting. So a lot of people don't even know what's happening today. So I would wait until Tuesday morning to see what the move looks like. But I think it's going to be a good quarter. I think it'll be a good quarter. We're just going to have to see how the results end up coming out. Salesforce still down 2%. And then PayPal continuously losing momentum. It got to 80 last week, now back to 68, down about 1.6. Ethereum lost 3,600 again. Dude, Bitcoin lost 106 again. What is going on? Oh my goodness. This freaking whiplash, up or down. Guess what? Robinhood just lost 144 again. I mean, you see Amazon losing 257. Meta bounced up. Now it looks like it's headed back down. I don't know if it's a full-on downturn from the mini V-shape we had, but Bitcoin and Ethereum definitely not cooperating that much. Now Bitcoin back above 106. Dude, someone is trying to trade this thing within a range. And you're getting, look at that. All the way down from 108, then it bounces, then it comes right back down. Now it's trying to bounce again. Welcome to November, folks. Welcome to November. Boom, thank you for the $20 super chat. Appreciate it. Thanks, Amit, for all you do. Days like today are when we need you the most. Appreciate you, Boom, being here. It's going to be a big day. We got Palantir earnings. I'll be live at 3:30 to start coverage on that. And then we got Grab after hours. So we got a lot of stuff that we're going to be looking at throughout the entire day. Dinesh, thank you for becoming a channel member. Appreciate it. And Scuba, thank you as well for becoming a channel member. George, thanks for being a channel member. Deutsche Bank price increased on Tesla and moved to buy. That could also be a reason why Tesla's moving today. Deutsche Bank has relatively not been the most bullish on Tesla from my understanding. Well, actually, they were kind of bullish, but they had a 440 price target. They raised to 470. Okay, so 440 was not super bearish. So it is good to see an upgrade. So that, along with that South Korean rumor about the Samsung deal, that could also be some of the reason for the price action. Can you talk about Duolingo? So Duolingo has earnings this week, right? Do they? Yes. Oh, it's on the day of Robinhood. Okay. So I did a deep dive on Duolingo a couple weeks ago. I will link that in the chat for anyone who wants to read it. I did Nebius and Grab yesterday. Duolingo and BMNR were the first two. So if anyone wants to subscribe, check it out. It's free to subscribe. I have another couple articles coming out this week. So all of that is on the Substack. Look, here's the thing. After my deep dive on Duolingo, I became bullish on the fact that I think they have a moat. I think it's hard to say that they don't have a moat. Based on their proprietary data, based on their network effect, based on their just top line growth and bottom line growth, particularly daily active users, monthly active users. Like, I don't think one can say Duolingo does not have a moat, especially if you haven't really looked under the hood and seen. It's almost like when people said Spotify has no moat because there's other music competitors from big tech like YouTube Music and Apple Music, which I was one of those people, by the way, that thought Spotify would get crushed. Spotify is up 8x from the bear market of 22 because they had a sticky product that people used. Having said that, I don't like the narrative that language learning, which is not as important as music, like objectively, music matters a lot more to people than learning a new language, and is not as important as other consumer products that also have similar network effects, like a Robinhood, like a Uber, et cetera, for transportation, a Netflix for content. I don't like the narrative of how easily it can be replaced by big tech. I don't think the narrative is necessarily true if you look under the hood at what Duolingo has built. And if the earnings growth continues, then eventually the price will catch up to the fact that the narrative is BS. But the narrative is still there. And the question for me is, am I willing to hold this position with that narrative in my portfolio? And the answer is no. I don't want to deal with the stress of thinking OpenAI will come out with some language thing one day and then boom, Duolingo goes down 20%. So yes, Duolingo it teaches you music lessons, but my point is Spotify, like if you have a playlist on Spotify from 2017 when you were a senior in college, you're not leaving Spotify because your entire emotional nostalgia of the memories of being a senior in college are in that playlist. That's a big deal. And although Spotify has crappy gross margins, which have started to inflect over the past couple of years because the record labels, they're gaining more leverage with them, the network effect of keeping you on Spotify, because the hassle of transitioning all your playlists to Apple Music is like something people don't want to go through. That's a real thing. And even though YouTube Music and YouTube Premium is cheaper than Spotify and probably a better deal, people are going to stay on Spotify. Bitcoin back below 106. So a lot of you in the chat saying I left Spotify. I left Spotify too. When YouTube Premium came out with YouTube Music, I was like, why the hell would I pay for Spotify? I get YouTube ad free and I get all the music I want. And I left Spotify as well. But obviously, based on their numbers, they have like 600 million monthly actives at this point. You know, people are choosing not to leave. So that's my point with Duolingo. I think even if some big tech company comes out with some language learning platform, most people are going to stay on Duolingo, which is why I think it's undervalued. And if you look at the numbers, I think, you know, this thing should be trading closer to 400, but that narrative is pretty annoying. And you have to look past that narrative to be excited for Duolingo. Enphase right there, 29.93. In terms of earnings, I expect Duolingo to crush it. And if they don't crush it on this earnings, that's when you have an issue. Because last quarter, they did show a decline in monthly active users. Now, it's likely because there was some boycott on social media because of AI, and that's what caused the issue. But if they have a quarter for the first time in about, 15 quarters where DAUs and MAUs go down, yeah, it's not going to be pretty for Duolingo. But I don't think they will. And I don't have any skin in the game outside of it being in my ETF. But I think they're going to keep accelerating. And if they do, then, you know, we might see the stock get back closer to that $300 level. VIX is back up to 18, still down or still up 5% on the day. It was up 7% at one point. S&P is trying to go green. It's a couple of cents away, but still red right now. YouTube Music's UI is worse than Spotify, 1,000%. YouTube Music, I think they really need to redesign that app. Like, it's not a good user experience. And I think there's a lot of easy ways for them to just make it like Spotify. But nonetheless, I'm not going to pay Spotify $20 a month if I'm paying YouTube Premium $20 a month and I'm getting YouTube Music with it. So for me, rationally, it made no sense to have both. But music is very irrational. You have a lot of memories and stuff associated with it. Not to mention the data aggregation from Spotify gives you better recommendations, which I think they do have a little bit of an edge on YouTube Music on that as well. So we have plenty of people that will pick Spotify for that reason. Joby's down 10%. Tesla holding 470. Navitas down 10%. How is ETH under 3,600? You know, I don't know. Someone's obviously selling it, which, by the way, is weird because take a look at this. We had another one of those crypto whales this morning that is super long Bitcoin and Ethereum. I thought I had it saved. Let me see if I pull it up. But it's someone who's going long 400 million Bitcoin and Ethereum. Yeah, right here. So this whale has 100% win rate. And you know this because all of this stuff is publicly disclosed on the blockchain addresses. And he's increased his positions in Solana, Bitcoin, and Ethereum. And he opened a 10x long leverage position on Hype, HYPE. Bitcoin is 133, ETH is 150, Solana 110, Hype is 6.6. His overall positions are worth 400 million. One could argue maybe this person knows something based on their track record. But you do have the opposite happening as Bitcoin is selling off. Maybe it's Barron Trump. Maybe. Well, I don't think it's liquidated by now because he's not leveraged on Bitcoin, Solana, and Ethereum. He's leveraged on Hype. So maybe he got liquidated on Hype. I don't think they liquidated the entire 400 million. Is Hype down? How much is Hype down? This is for Hyperliquid, which is another really important. Yeah, Hype's down 5% today. I don't know if that's enough to liquidate him, but potentially. Yeah, there you go. Hype down about 6% right here. It's a weird way to start off November, folks, but this is how November's starting off. Not to mention, we got that AWS deal this morning with OpenAI, which was a pretty massive deal. But it's almost like the street doesn't care that much about it, given you had that 38 billion. Let's get a little bit more coverage on the Fed and what to expect in December. Then we'll keep going from there.
Lori Logan from Dallas, Jeffrey Schmidt from Kansas City. All three opposed that October cut and cast doubt on whether they would support a December reduction. Only Schmidt is the voter there now. Their basic argument: the economy has plenty of momentum. Inflation is running above target. Schmidt says it's spreading. And there's no signs of tight Fed policy anywhere in the markets. Meanwhile, Fed Governor Waller, a leading contender for Fed chair, and Governor Stephen Iren, on loan from the Fed to the Fed from the Trump administration, both spoke in favor of further cuts, while Powell said the Fed would slow down in the fog. Waller responded in an interview, "The fog doesn't tell you to pull over to the side of the road," advocating there for a December cut. And Myron, who has now dissented twice in favor of 50 base point rate cuts, said the U.S. risks recession if the Fed doesn't cut. Lots of Fed speakers this week. I count 11 of the 19 Fed members talking. Not all of them talking directly about the economy or monetary policy, but it seems like sometimes they've been stepping out of their regularly scheduled.
All right, so let's do a poll in the chat. Who thinks we're not getting a December cut? Who thinks we are not getting a December cut? Because I think we're getting that freaking cut. I think a lot of this stuff is just hoopla and some hanky-panky going on, in the words of Paul Atkins, before they announce the cut. But I find it very unlikely that we don't get the December cut. A couple of updates right here. Someone just bought 9.9 million worth of IWM puts for end of year. So you got someone going bearish small caps, 231 put December 19th. Got about 10 million of those. And then another headline right here that's quite interesting, actually, with gold. A Chinese state bank closed retail gold accounts to new investors on Monday, 2 days after Beijing tweaked a long-standing tax exemption for the metal that is likely to hit retail demand in the world's biggest consumer market. State-owned China Construction Bank said on Monday it would no longer accept applications for one of its gold purchasing accounts without giving a reason. Wow. China is artificially stopping the demand of gold from retail investors or individual investors by closing the ability for a state-owned bank to take applications for people that want to buy gold. I wonder why they're doing this. Maybe they're trying to get a control on the price so that they can buy gold at a cheaper rate for their overall central bank. Gold right here is still above 4,000, but you're starting to see a little bit of the countries that have a lot of exposure to the asset potentially change the way they allow individual investors to get exposure to it. Has that ever happened in the United States? Has there ever been a United States federal policy that stopped people from buying commodities? I don't know if that's ever happened. That's quite incredible to see. SoFi right there, back above 30, and then the S&P goes green. Very slight green, but the S&P goes green. I feel like the U.S. has done that before. I just feel like it's been so long since they've done it that, maybe we don't think about it too much. But China's doing it outright at this point. 1931. Okay, that was a while ago. That actually makes sense. I mean, during the Depression, you probably had the government do a lot of different things. But I think in the modern era, like in the past 25 years, I don't know. I don't know if we've ever. Oh, we should use Gemini for this. Has the U.S. government stopped individual citizens from ever buying gold? Let's see what we got. No, the U.S. government has not stopped individual citizens from buying gold. This ban was repealed in 1974. Historically, there was a restriction on private gold ownership during the Great Depression. All right, so since 1933, we have not seen something like this happen. But it did indeed happen through executive order from Roosevelt back in 1933, effectively ending private gold ownership to help stabilize the economy during the Great Depression. Okay, there you go. Yeah, well, technically correct. 40 years, 1974, it was repealed. All right, so since 1974, we haven't had something like that happen. Amcor still making a move, baby. 37.19. Shout out to Stock Talk. This was the first stock we covered on our podcast. He found a gem. He really did find a gem. So not too bad. Dipped to 28 last week on the CEO retiring, and price target today getting this thing back above 37. Does this mean China's economy is in trouble? I don't know if I would say it's in trouble, although some of the manufacturing numbers we got yesterday night definitely weren't good. Like, it was not like, oh my goodness, the economy's thriving. Which is why I think Xi is not being that hostile with Trump, and he's negotiating on these rare earth export controls, because they don't want to go back to where they were back in July of 2024. That's when they loaded out the exact term was bazooka of stimulus to try to get things in order. And it did work. I mean, they were lowering the reserve ratio rates in banks. They were giving out stimulus. They were doing a bunch of different things. They had that whole Evergrande collapse with real estate. I mean, the majority of Chinese citizens own real estate as their core investments over Bitcoin or gold or stocks. And real estate just tanked over the past 5 years. So you would imagine they want to make sure they don't isolate the U.S. consumer in order to keep them going. All right, what else do we got? What else do we got? S&P just went green. Bitcoin, are we holding on? Bitcoin, wow, dude, S&P goes green. Bitcoin's still down 105.8, basically to where it was on the low of day. Low of day was 105.4, so you got a couple $100. What do you guys think is going on with Bitcoin and Ethereum in the chat? If you had to have a theory or a thesis, what do you think is going on with it? It's obviously someone who's aggressively selling, or algos that are aggressively selling, but it is weird, dude. It is very weird. And again, I know Bitcoin's doing very well historically, but kind of people care about what's going on in the moment, and the moment is weird. Consolidation cycle is over. There was too much bullishness. Was there too much bullishness? I mean, like, Bitcoin's been flat for the past 5. It's not like retail's not even searching for Bitcoin. We looked at the Google Trends data last week. Coinbase is not even in the top 200 apps in the App Store. I would rather say retail doesn't care more than retail is too bullish, which is hurting Bitcoin. The government shutdown. Too much corruption made it a joke. Well, I do think the institutionalization is fighting back against a lot of the corruption. I don't know. I don't think this is a time to get bearish on crypto, but obviously the price action is not conducive to what we're saying. I mean, the amount of things we see every week in regards to Larry Fink or Jamie Dimon or all of these very important financial people that are integrating crypto into the literal structure of new products that they're bringing into their clients that have lots and lots of money that are trying out these products. It just feels silly to get bearish on that. And it's more like the price is testing your overall conviction levels, even in the face of seeing the trajectory go higher. Nonetheless, that's what you got. That's what you got. Where's BM&R? Are we still at 43? 43.08. Down 7% on the day. Amcor still holding on. Google 0.16. Reddit's down. Reddit had a great earnings. I don't think Reddit deserves to be down. And then Amazon holding up. Yeah, I think at the end of the day, I do think November is going to be a point of consolidation at least over the next couple of weeks. And I don't think that's unhealthy, but you have some names that are just getting no real consolidation. They're just going red. They're just going red. Tom Lee was on in the morning. We listened to him already. Again, he continues to be bullish, and BitMine put out a statement this morning as well. And essentially what he said in the statement is that right now the fundamentals are going up. The price is not. The price will eventually go up as the fundamentals continue to converge. And you kind of just got to believe in that. People are moving their money to AI. Yeah, I mean, that could be happening as well. People are moving their money to AI. I mean, you got these data center deals that are getting people. Here's the thing about some of these crypto plays like a BM&R or like a MicroStrategy. I don't think the majority of investors, especially retail that are in these names, care about the long-term thesis. I think they care about the trend. And that's okay. There's nothing wrong with that. But if the trend is now down and the trend on Iren is to the moon, I mean, you got a lot of short-term traders that are just going to say, all right, I'm out of this. I'm going to Iren. Now Iren at 66, down from 75 this morning. So this one's taken a hit, but it's still up 8%. But you will have people chasing something that's more trendy. And if that trend starts going the opposite way, then they might get out of that trend as well. So it really comes down to, you doubling down on, do you think there is a real macro trend in Ethereum to be long BitMine? This is the heat map right here. My answer to that question is yes. My answer to that question is yes. But that doesn't mean the price is going to cooperate in the short term. Is Quantum still getting hit? Where's Quantum? Oh, yeah, still getting hit. Down 10%. That is kind of weird, though, right? For Quantum to get hit today. Same thing with Oklo. All these names, S&P goes back to green. Those names are still getting hit. The energy stocks also still getting a little hit. Bitcoin, Ethereum getting hit. PayPal and Salesforce, those are your value names that are getting hit. And then Apple down 1%. Apple had a great earnings as well. I don't think Apple has to be all-time highs, but Apple continues to go down. Not weird because they were running at the end of last week. Well, that's fair. That's fair. A lot of those names did get a big move last week. In fact, I think Quantum as a sector was green when the entire market was red on either Thursday or Friday. I think it was Thursday. So you are right. They did make a move last week. Yeah, Bloom Energy is up 7%. Yeah, you could just chalk it up to the market being red, to be honest. You could just chalk it up to a lot of those names being red with the market. And a lot of those names are well above. Like D-Wave was at 26, so it's well above where it was at back in the October drawdown. Oklo is actually below. Well, no, Oklo was at 118. So Oklo, so all these names are still holding above the lows of October. Brentivis, thank you for the $20 super chat. Morning event. I'm currently in a 2 option contract. One is up 300%. The other one's 600%. I messed up by not going into them with a plan. When would you look to exit? Expiration is on January 2027 and May 2026. Only have 2 contracts each. Okay, so first of all, congratulations. You won. You're up 3x on one contract. You're up 6x on another contract. Look, if I was in that position, obviously I can't tell you what to do, but you only have 2 contracts each. So it's not like, this is some massive 100, 200 contract position. If I'm up 3x or 6x on an options contract, I'm probably taking my profits, because at the end of the day, it's very hard to get those types of returns. If you were able to get in before the underlying made a move and you added leverage with the option, then you should take profits. And so unless you're waiting for like a 9x or 10x, and I don't know what stock it is, so I don't know which name exactly you're kind of talking about, but yeah, I would take my profits there. Usually if an option gives you an exit and it gives you a juicy exit, you kind of just can't get that greedy. Speaking of people that are being fearful when other people are greedy, we didn't even talk about this yet, so let's get into this. Buffett Buffett has a record amount of cash, folks. Berkshire had earnings on Saturday, and he has sold $6.1 billion of stock as of last quarter. They have halted all of their buybacks. Basically, Buffett's telling you that he thinks Berkshire is overvalued right now. And he now has $381 billion of cash. What do we think this means? Look, my opinion here is that at the end of the day, as much as I love Warren Buffett, greatest investor of all time, he is stepping down from the firm, number one. Number two is Berkshire completely missed the tech revolution over the past 10 years outside of Apple. And they deserve a lot of credit for how heavy they went into Apple, but everything else they missed. So it is not surprising to see them have a lot of cash on the sidelines because you think they're going to pay 30 times sales for Nvidia. You know, like, no, there's no way in hell. You think they're paying 33 times EV to EBITDA multiples for Amazon? I mean, they do have a little bit of Amazon in the portfolio, but that doesn't mean they're making it a massive, massive position like they made for Apple. Apple, they got in and they didn't even think of it as a tech company. Buffett has talked about it many times. He thought of it as a consumer hardware play back in 2016. And that's why they made the investment. They're likely not going to load up on Meta on this dip because they've never thought of buying Meta, even though Meta is now trading at 19 times 2027 earnings, which to me is kind of stupid. So I think it makes sense that they have all this cash on the sideline. I wouldn't read into it like, oh, Buffett thinks some cataclysmic crash is going to happen, and that's why he's loading up on cash. I think it's rather he thinks, look, as an investor in terms of Berkshire's philosophy, they would never buy a market trading at the S&P is trading at what, 26 times? They would never buy that, ever. That's just not, they would never do that. And so if they were never going to buy a market at these levels, then they're obviously going to hold on to a lot of cash. And they probably feel way happier getting their 4% from treasuries. I think they have more treasuries than the Federal Reserve itself. I think Berkshire has more treasuries than the Federal Reserve, which is kind of crazy. But nonetheless, it seems like that's why they're holding on to all this cash. Now, it does beg the question, what the hell are they going to buy? I mean, eventually, investors are not buying Berkshire stock for them to hold on to that much cash. They have to deploy it somewhere. I wonder, I mean, they bought UNH, right, as it created an attractive opportunity. I wonder if they're going to just buy more of the stuff that they think is cheap. Yeah, as cash continues to lose value, I mean, that cash has got to go somewhere. Also, Kraft Heinz, yeah, I mean, they're taking a nasty loss on that one. I think Kraft Heinz was one of Buffett's like biggest L's. Every investor will have massive L's throughout their career, especially if you do it for like 70 years. And Buffett has admitted Kraft Heinz is, one of the ones they really messed up on. But there's probably going to have to be a lot of restructuring in Berkshire to make this happen. Buffett should save BM&R and buy. Dude, could you imagine they plowed $300 billion into BM&R? BM&R back below 43. That'd be crazy, bro. That'd be absolutely freaking crazy. But yeah, that's not going to happen. That's likely not going to happen. Jamie, thanks for the super chat. Amit, do you still have your UNH spreads and SMCI spreads? I still have the SMCI ones. I don't have the UNH ones. The UNH ones I got out like a couple of weeks after I got into them. I made like $300. So UNH, I'm not in. SMCI, I am in. However, I was talking about this last night. I am thinking of getting rid of a lot of leverage going into 2026. I don't have any options except for SMCI and Grab. And so for Grab, based on the earnings results today, we'll see. Thinking of selling half those spreads and just buying the stock instead. And then SMCI, we'll see towards the end of the year. But like, I do want to reduce option exposure going into 26 because I just don't know. I think 2026 is going to be good. But then again, you have the midterms, you got the shutdown, you got Trump. Like, you just don't know. And if you want to be super levered, it just might not work out in the short term. So I do think there's a lot of portfolio choices to make towards the end of 2025 to prepare for 26. Buffett should go all in Nebius. Dude, like, look, Buffett's not going to run Berkshire anymore. Someone else is going to run it. Nebius down 6%. I wonder if is it Greg Abel who's running it? Because Greg's not going to ever buy Nebius. But I wonder if Berkshire can eventually evolve into being a firm that actually buys things that are not just trading at low multiples, but rather buys companies that have higher multiples, but you're willing to overlook the multiple because you think the multiple expansion can happen if the company can outgrow the current PE ratio or price of sales ratio or PEG ratio. I don't think the Berkshire investor base would ever allow that to happen, because a lot of them probably, like if he took a stake in Nebius, I mean, unless Buffett himself says, hey, I think Nebius is a deal, I think any other Berkshire executive trying to pitch a growth stock to the investor base is going to be a hard sell, because those investors are buying a certain quality of companies that they hold themselves up to. But in order to get alpha over the next decade, you might just have to take a risk and buy some Meta when it falls 15% versus buying Verizon. But yes, as Matthias says right there, that's not what Berkshire buyers want. And I wonder if Berkshire will still be able to, because again, remember, and this is objective right here, and I'm a big Buffett fan, but Buffett would underperform the S&P 500 over the past 10 years, which again, if you're managing money and you're not beating the S&P 500, there is literally no point to managing money, right? Because people can just take their money and put it into the S&P 500 if they didn't buy Apple. If they didn't buy a tech company, no matter what Buffett thinks Apple is, it is a tech company, they would be underperforming the index. So one could argue Apple really solidified Berkshire's final 10-year performance. And so I wonder, can they go another 10 years without buying a tech company? Can they hold on to Bank of America and American Express to get them the gains that shareholders have enjoyed over the past 10 years? Or are they going to have to take a bit of a risk? Buffett should buy Tesla for a joke. Dude, it could be seen as a joke, but like Tesla could be what carries Berkshire over the next decade if they take the plunge, but they probably would never do that. Why wouldn't you buy UNH here? I don't hate buying UNH here. I mean, I'm not in it, but UNH from old conventional metrics is cheap. Again, UNH has that narrative on, could it be a value trap like a Salesforce and a PayPal? And quite frankly, you know, it's bounced from 230. It's proven to not be the value trap. Granted, 230 was the absolute lows. So the question is, can it make a bounce from 330 up into the 400s and really get the street to get on its side? I don't know. But I am personally not in this name. I don't think it's crazy to buy the dip on this name, especially if you're in it. Given it seems like a better risk reward going into 2026 as well. But UNH has to increase their EPS guidance. I mean, I know they did that a couple of weeks ago on their earnings, but if they don't continue doing that, and they definitely sandbagged a month ago, but that is the number one thing that I think the street is going to care about. 81% of you said we're going to get a December cut. 81% of you are thinking that we will get this December cut. All right, I think we'll get it as well. But we're going to have to see. Dude, Bitcoin back to 106, Ethereum back to 3,600. These things are just playing with us today. Like, if you're going to dump, they might as well dump. If you're going to pump, they should be breaking above these levels. Bitcoin right back below 106. Look at that, 105.9. Just annoying price action across the board on these. The rate cut depends on inflation. I don't even think it depends on inflation anymore. We know inflation's going higher. Like, inflation's not rampant like it was in 2022, but inflation's not like subdued by any extent. I think what matters now is the labor market and layoffs. And we don't have a lot of job data because of the shutdown, but the Fed knows the labor market's not pretty. I mean, Jay Powell spent a good 10 minutes talking about it in the last the meeting. And he pointed to the fact that, hey, we're in a low hire economy where people are not going to be hiring as much as before, partly because of AI. And the Fed knows that, you know, when people are going delinquent on their subprime auto loans and when there's issues in regards to credit card delinquencies, that it's not that easy to keep rates. Not to mention mortgages that still need to come lower. This is what Jay Powell said 4 days ago on inflation versus the labor market.
I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way we have been thinking, way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that
inflation is calling for the hike, labor market is calling for the cut,
got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Basically, he's saying, dude, we care about the labor market. We care about inflation. Inflation's not going down to our 2% target. It's staying stuck at 3%. So that's telling us we shouldn't really be cutting. Maybe we shouldn't be hiking, but we definitely shouldn't be cutting. The labor market's screaming at us that we probably should be cutting, even though we're not getting above 5% inflation or above 5% unemployment. Unemployment's at 4.3%, which is relatively tame. But if you actually look at what's happening, it's obviously not looking pretty, especially with the advance of AI. So this whole risk management philosophy that Jay Powell's talking about, I think is going to gear towards a cut versus a pause in December, because they just don't want to be a Federal Reserve that says people should continue to get unemployed and they do nothing about it. And, from that perspective, I think they're going to do something about it. I don't know if we're going to get massive amounts of cuts in 26 until Jay Powell gets replaced in May, but I do think December we get that cut. Labor market will win out this time. It's more of a threat. Yeah, I agree. It's much more of a threat. If we don't get a December cut, I don't think Santa Claus is coming to town. It's going to be a really, I think, ugly end of year, because the market is obviously pricing in another cut. And so, now granted, earnings have been good enough to withstand not getting a cut. It's just that super kind of bull case, 7,000, potentially above 7,000. I do think you need a cut to make that take place. So we're going to have to see. Big Bear AI, that stock is down 9% on the day. D-Wave continues to go down about 10.62. Oklo down 6. SoFi recovering above 30, which is very nice. Sam says just Uber Santa Claus in. Uber's had a good year. Bill Ackman bought a lot of this thing at $60. He's done very well. What if no cut, but it's dovish? He can be as dovish as you want. If he doesn't give us a cut, I think it's going to be ugly. So I think we're going to need to get that cut. CoreWeave down 4%. It's not just Oklo or Quantum. It's CoreWeave and Nebius. I mean, you got a lot of names that are getting this 5 to 7% hit for different reasons. Archer down 9%. But nonetheless, they are getting hit. Duolingo right here, down 2.3. Micron's had a fantastic run. That one's not slowing down. Micron right there, 233. Micron now year to date is what, 120%? 168%. Who owns Micron? Put it in the chat. I think there's a decent chunk of you that own this one. And, this is the power of conviction. I know a lot of people held on to Micron. I think Neil, right? Neil, Couch Investor, he's been a Micron bull for a long time. And he's never let go of the thesis. And you're seeing some momentum right there. Open Door as well, down about 1.35% on the day. I've held since 87. Held since 62. Yeah, a decent amount of people holding on to this. Camp, thanks for the super chat. Amit, do you have a hunch about how Palantir's Q3 is going to play out? So I talked about it a lot last night on the Future Show. So if you go to the Future Show and you click on the Palantir chapter, we talked about it in depth. If you watch Palantir Weekly, you'll get all of our predictions as well. The TLDR on kind of how I'm thinking Palantir is going to play out is that the move has already happened. The move I thought was going to be to 200. It is well above 200 now. So the implied move is 10%. We're looking at either 220 or 180. I don't know how good of a quarter they have to put up for this stock to move to 220. My gut tells me you've got to be above 55% revenue growth. You've got to guide closer to 50% for fiscal year revenue growth. You've got to add 100 new customers in the quarter, and you need operating margins to be closer to 47%. If they do all of that, I think the stock pumps. However, they could do all of that and the stock doesn't pump because it's already priced in, because it's already made its move. That is something that is very possible. If they do none of that, or if the expectations are much weaker, or the earnings are much weaker than what the expectations are, then the stock obviously can take a hit as Palantir has an aggressive premium. But the reason I've actually been buying Palantir around the 170s, 180s over the past couple of weeks is because I do think it's going to be a monster quarter. I think there's a world they put up 1.2 to 1.25 billion in revenue. The expectations for the analysts are only 1.09. And if that's the case, then, I think there is a world where Palantir really can pump. But we're going to have to see how this plays out when we get into earnings. If it does dump to 180, I mean, does anyone care? Right? Like, yeah, I know it's going to be annoying that we lost 200, but 180 is still one of the best performing stocks in the S&P 500 all year. And this move to 200 probably was more speculation and the Nvidia partnership than actual earnings, which is why we got it. So if the earnings aren't as good and we lose it, it is what it is. But if we accelerate from these levels, which I do think is very possible if they can deliver one of those quarters where you see a 5 on the growth handle, but you see like a 6 or a 7 after the 5. Oh my goodness, I can't believe I did it again. But if you see 56 or 57, that would be very exciting. And if you see 60%, then I think we are going to the moon. It's just up to Palantir to see if they can actually put up that growth. So I'll be live today after hours. And we'll be covering Palantir. Could it be flat? Yeah, it could be flat. And you know what? If it's flat at 200, I'll take it, because I'm very happy that we are above 200. If we stay at 200 and we don't have a big move up or a big move down, I would not be the most angry if that ends up happening. So I just want the company to perform. I mean, this is the almost 20th quarter that I've been covering the company. I just want them to perform well. The stock's already made a massive move this year, made a massive move last year. So as long as the stock performs, then I think it's going to be okay. Take a look at this chart right here. The top 10% of the United States of America own 87% of the stocks. The remaining 90% of Americans hold just 13%, while the bottom 50% in terms of income hold just 1%. On top of this, the top 10% control 84% of all private businesses and 43.9% of all real estate. This goes back to what we were talking about yesterday, which is at the end of the day, there is a bit of a wealth gap that is creating a bifurcated economy. I'm working on a Substack piece on this as well. And, you're starting to see more and more excitement from people that are wealthy that are propping up the economy. And these other consumer brands are not necessarily doing the best. And by the way, this is proven through Ford, which is usually not having, the best car sales. Their sales are up 1.6% in October, and they're smashing all the rest of it.
But overall, Ford sales up 1.6%. ICE vehicles, internal combustion engine vehicles, those sales were up 3.4% compared with October of last year. Here's the big fall off. EV sales down 24.8%. That is not a surprise. That will not move markets. There will be nobody who says, oh my goodness, sales were down 24%. That was expected. Hybrid sales down 4%. Bottom line is this, guys, none of the sales numbers that we're going to hear from any of the automakers who are reporting for the month of October, none of them are going to be good.
So EVs are going down, but overall sales are up. And I showed this clip last night, but I do think that's important. It highlights what's going on and what could be going on. Why is Ford, in an economy where you have the bottom 50% not doing as well, still able to sell cars? It might be because of the wealth effect.
Believed, or things other people believed. We love that more than anything. We did a spotlight on Ford and GM today. Ford and GM made 52-week highs this week.
Yeah, what's the story there?
The story there is the wealth effect is what sends people to the dealership to buy a new F-150, not trade war bullshit. These companies have handled this tariff this tariff situation so well, not because they're in control of the prices of the supplies they buy, but because the demand never let up. The demand never let up because everyone's stock portfolio is at a record high. So GM is selling. GM's in a better situation than Ford. They're selling more higher margin SUVs. Ford has a lot more execution risk, and it's not as good of a stock. They don't do buybacks, they do dividends, blah, blah, blah. But the big picture is both of them are at 52-week highs. If I told you in March, next month, Trump is going to restart the trade war, and auto parts and finished automobiles are going to be like the epicenter of the trade battle with all these countries, you would not have said, oh, I get it, therefore buy Ford and GM. They're up more than Tesla this year. People don't even understand that. And so my point is, that's the power of the stock market wealth effect.
Academic studies that will tell you it's a couple cents for every dollar of equity net worth that will support the economy. This time, it's been a really big increase. So equity net worth has gone up by about $6 trillion this year.
That's it. That matters.
Which boosts growth of call it 40 basis points if you apply historical estimates. And historical estimates are understating it because this time the equity exposure is a lot broader than it typically is. So, for example,
because of retirement accounts and
because of
stock option compensation
and the whole like Robinhood thing. So younger people are involved in equities, which they didn't used to be. So, for example,
35 million new accounts in the last 3 years.
Yeah.
You know what's so interesting? Amex, if you look at their earnings call, all of the growth, not all the growth, the biggest growth is coming from Gen Z and millennials. The biggest growth, the biggest spending growth. They're spending more than boomers are, which is kind of wild when you think about you think Amex is like an old premium stock. No, it's not. It's growth on the young end.
And they own crypto and they own tech stocks in much higher proportion than the rest of the population. And they have made more money from this boom in stocks in some cases than their parents.
Yeah. So millennials, so currently roughly age 35, own about 23% of their equity, of their net worth is in equities. Boomers, when they were at the same age, had only 6% of their net worth in equities. That just tells you the broadening and why it's impacting younger people, which it typically isn't the case.
So in conclusion,
it's a big deal, dude. It's a big deal. Millennials have 23% of their net worth in equities. And if you're, 35 and under, and you got into Palantir a couple years ago, Nvida a couple years ago, Tesla 4 or 5 years ago, even if you got in at 100, 200, now at 400, Amazon, Meta, Google. I mean, if you got into the most important companies in the world when you were 30 or 27 and now you're 35, 38, your net worth has increased dramatically. And your parents only had about 6% of their net worth when they were your age. My parents had 0% of their net worth in equities during my age. And it's a totally different generation because obviously if those assets compound at the level that they're compounding at, I mean, these stocks are up thousands of percents over the past couple of years, then there's going to be a wealth effect. People are going to feel richer and they're likely going to feel more likely to buy a Ford F-150. Now, for a lot of us, it's not 23%. It's a lot more than 23%. But if the average aggregate 35-year-old has 23% of their net worth exposed to just even the NASDAQ, even the S&P 500, that's done almost 3 years back to back at 20%. It's not easy to have assets compound at 20% every single year. Most people have their paycheck and that's it. They don't have something that's actually growing. If you don't own your own business, which most businesses, especially small businesses, are not the most profitable, right? There's a lot of work to put into it. And so you can't necessarily assess the value of the business is going up 20% every year. The only other way to get that type of exposure is crypto or real estate. Real estate is not compounding at those massive levels like these individual tech stocks. And so if you have any level of allocation to those individual tech stocks, which is the majority of what's kept up this market over the past couple of years, you've done very well. But the majority of people don't invest. So it's it really is one of those things where I think over the next coming years, we're going to have to figure out what does it mean for a lot of people to get rich while a lot of people don't have any allocation to the things that are making the rest of the country rich. What does that do for spending, the labor market, etc.? So something we're going to have to keep an eye on over the coming years for sure. Maccabee, thank you for the $50 super chat. I just bought 25 Palantir 210 January calls. I'm ready to rock. Look, I think Palantir can make a good move today. Again, I personally am not playing the earnings with any type of leverage. what price are the Palantir 210s? I mean, if you bought them at 210, you probably had to pay some premium above 210. The call options are definitely expensive today because it's earnings, so they're juiced up. So 210 call is about $19. So Palantir does not need to be above 210. It needs to be above 229 because it needs to be above the premium you're paying. So you're basically counting on a 15% move by January, which I think is possible. But again, you just don't know. And if you don't know, then you got to be able to handle the risk that comes with it. How many of those 210s are open? Let me see. 210s, 8,000 of those are open for January. 250, 5,000 are open. 300, 1,600 of those are open. Dude, the Palantir option chain now has 390 as one of the strikes that's open. So again, look, I usually don't play earnings. I definitely don't play earnings with options, but you've got to be really confident in the move that they can make for these options to do well. Look at Netflix. Why are they hammering Netflix down 4%? At the same time, DraftKings is getting a little bit of a move. Netflix did do a stock split. I think it's going to be effective at the end of the month. And then you'll be able to get it for $100 a share versus 1,000. What's the headline? Why is Netflix? I don't see any headline. It looks technical. By the way, did anyone catch the Dodgers game, bro? That game was one of the best games in history. And I'm not even a baseball fan, but that game has got me interested in baseball as a sport. Like, I used to legit think baseball was boring. That game, I kind of curious to watch the Dodgers next season and actually watch some games. It was a phenomenal game. And the fact that the Blue Jays were so close to winning and it didn't happen. You know why I'm happy the Dodgers won? I don't really care about the Dodgers or the Blue Jays. And I don't have a dog in this race. I wasn't betting on it or anything. I'm happy to witness greatness. And for Shohei Ohtani to get 2 World Series back-to-back, that's greatness. And if he can get the 3rd one, I mean, I'm a fan of people being great in their element. And it's so cool to see them go back-to-back. So that's why I was happy for them winning. Yeah, that slide in the 9th inning, it was 1 inch. It was less than an inch that separated the Blue Jays from winning. I don't even know all the rules about baseball. I was interested. Dude, that game, they needed that game to get people excited. Like, I don't think, it's been like 10 years. I don't think people have been that excited for baseball. I mean, like the fact that baseball clips are going viral on TikTok, like people legit, like America legit cared over the weekend, which I thought was also pretty cool. Meta right there, 650.69, slightly green on the day. You should play cricket. Dude, I get so much shit for being Indian and not knowing anything about cricket. Like, I'm not even going to say my opinion on cricket. I don't know why people like cricket. But it's like more special than baseball in terms of the overall coverage it gets universally. Dude, it's so boring to me. Like, what? Like, cricket looks like a stupid version of baseball. There, I said it. I don't care. Cricket looks like a stupid version of baseball. That's what it looks like. That's what it looks like to me. And I know I'm going against my ancestry here. But I'm like, dude, what is this, bro? What is, what are we? I know cricket's more possible than baseball. I'm going to get a lot of shit for this. But, like, what? What are we looking at here? Like, I didn't get it. So I've not got into cricket, but baseball got me more excited. Yeah, dude, all my family, outside of my dad doesn't care that much about cricket, but everyone else, like all the men in my family, especially in India, they love cricket. And, whenever they talk about it, all you hear from me are, ironically, crickets. I know you're applauding in your head, even if you're not applauding out loud. So it's okay. I'll take the imaginary compliment in your head. All right, that's it for me, folks. I think we're done. I'll be back at 3:30, and we will cover Palantir earnings, as we are going to have a lot to get into. We'll have Grab after hours. It's going to be a big day for Palantir. I'll have Arnie, Amir, and Matt with me, and we'll be live. Congrats to those in Iren and Cypher. Big days for you guys. Amazon got a big deal. Data center plays look like they're not slowing down, but Iren and Cypher really needed one of those big deals, and it looks like you got it today. So very, very excited for all those people in that ecosystem. I did a deep dive on Nebius and Grab yesterday. It's on my Substack. Link can get right here in the chat. Iren will be up next, and I actually am happy I waited to do the deep dive on Iren because now I have a really big deal that I can actually analyze within the deep dive. So Iren and Reddit will likely be the next two coming out in about 2 weeks, but Nebius and Grab were yesterday. All right, word of the day. What do we got? Ephemeral. I think we know this word. Ephemeral. Lasting for a very short time, fleeting or momentary, beautifully, precisely because it doesn't last. It doesn't last. Well, that's life, right? Life is ephemeral. We have some decades on this planet, and then it's all over. And in the meantime, all of us are trying to get pretty rich before it's all over so that we can at least enjoy the ephemeral time we have on this planet. That's BM&R. Yeah, BM&R is also very... BM&R 65 was very ephemeral. I had an ephemeral huge gain today. Hopefully it's not going to be ephemeral for the long term. All right, folks, that's what we got. Siege, thank you again for the $20 super chat. You do not need to send that, but I appreciate you, brother. Thank you for the super chat. Thank you, everybody, for being here. I'll be back on the close, 3:30. We'll get started with the Palantir coverage. Big day. I'm excited. This is a company that has quite literally changed my life. It is the reason why I'm here today. I think they will do very well. What happens to the stock, we're going to find out. I do think the stock can make a move if the company really executes, but the stock has already made a move. So regardless of what happens, we'll be very excited to cover the company. We'll be very excited for Alex Karp shareholder letter. And we'll be live and get through everything as we get into the close. Thank you, everybody. Appreciate it. I'll see you guys in a few hours. Bye, everybody. Have a good one.